All right, I'm here with Brayden Sutton, author of Money Mind Beyond Speculation. We are going through the 7 key trading rules every serious investor needs to know before investing a dime in the market. So make sure to use the chapters below, skip around to each rule that interests you the most. And Brayden, thank you for being here. And let's jump right into rule number 1. Plan your trade and trade your plan. And that's in chapter 4 of your book, by the way.
Thank you. And thank you for having me, Gary. I'm sincerely excited to be on. I am a huge fan of your podcast and all the value you bring to the world and the incredible guests. So thank you. I learned the hard way that if a ship sets sail and has no destination, it will do circles in the port until it crashes. So some of the best advice that was ever given to me was essentially not paper trade first, but genuinely get out a notebook, have a plan. So I'm going to buy XYZ stock at $5. If it doubles and it goes to 10, what are you going to do? Most people don't have a plan. If it halves and goes to 250, what are you going to do? Most people that ask, they go, I don't know. I go, exactly. Have a plan before you set sail. It is phenomenal for both freeing the mind, because when you wake up the next day and the stock's up or down, you're going to sit there, your screen, your brokerage account, you're going to go buy, sell, hold every day. Brings the same 3 questions: buy, sell, or hold. When you've defined a plan prior to departure, it frees you from the liquidity concern. And it can even free you from the stop loss concern. Oh my God, I'm down 12%. Do I chop it? Do I take a tax loss? Forget that. Stop making intra-market day decisions. Have a plan. You will be amazed when you start to act and think like an institution. You will make more money. You will preserve your capital and you will sleep at night, and you will not be asking yourself at 9:30 in the middle of the morning, should I be buying, selling, or holding this stock? Because you already know. So it's a huge fundamental piece for investors, new or old alike.
How rigid are you on that plan? Are you flexible at all? If you have, you're like, no matter what, if it drops to $10, I'm going to sell, or are you more of a, if it gets to $10, I'm going to reassess? How loose are you on that plan?
I'm very fluid. I was once told that the mighty palm tree can bend all the way to the ground because of its flexibility. So rigidity in life is weakness. Old people break bones because they're rigid. Babies can be dropped because they're flexible. So I'm very fluid, but I don't make on the fly emotional decisions. That's the key. So if I bought MSTE at 14, use one bad example, drops to 4, did the thesis change? No. Did the market price change? Yes. Okay, well then my underlying macro thesis has not changed. Why would I change my plan? Did I buy a penny stock at 25 cents on a promote? Now it's at 12 and it's gone quiet. Should I reassess? Yes, you should, because the promote's over. You were the liquidity. Now you're holding the bag. You have to maintain flexibility, but don't do it under duress. Don't do it under fear or greed.
You said the word MSTE. That's a trigger word on this channel.
That's why it's a bad example right away. Horrible example.
But it's actually it brings me to a point, because I, even with MSTE, and now that we said the word, we got guaranteed 2,000 more views on this podcast. But that actually is a good example of what I was asking about. How flexible are you on a plan? Because when I bought it, I'd originally said if it drops $5, that'll be my point, and it was more of a point for me to reassess. And the underlying thesis didn't change, so instead I went, all right, well, I'll buy some more.
Yeah.
So I bought more. It was just a point for me to reassess, depending on why it was at $5, what was going on. You do a whole, when you do like an information dump to understand what exactly is happening for the drop. When it gets there, you do another reassessment, and then you see, what should I do with it?
Yeah.
That's sort of how I treat, and that's kind of across the board. So we're similar in there. I come in with a plan, and we were talking off camera about this. You said underlying thesis. We're we'll talk about this now. Your 100-to-1 ratio. I love this. It's
Big one.
the hours of research to an hour of investing. Talk about that, because if you've done that, it stops those panic sells as well.
And I can't reiterate enough that, and it sounds crazy to most new investors and traders alike, is don't make decisions during the market. Most people are kind of like, that's weird. Well, you'd be amazed if you act like Stanley Druckenmiller and you get out your journal and your notepad at night or before the market, how different you're going to make decisions when you're not under that fear or greed duress. So I get asked a lot, do I own too many oil stocks? I've got 37 in my portfolio. And I say, well, how about this? What if you were to invest 4 hours a week? Let's just use that arbitrary number on every company you own. Can you do that? Well, absolutely not. I don't have 10 minutes
No.
of stock. Then you own too many stocks, frankly.
Yeah.
So if I go out and I dig in on 100 hours in the world's next major copper discovery in Spain, and okay, you know what? I've got 100 hours invested. I'm basically an expert on this topic. I'll then go and then from a maintenance point of view, legitimately, if I can't spend an hour to 2 hours, maybe more every week, either connecting with the team or doing my own due diligence on a larger, non-micro cap company, um, I shouldn't own it. I really shouldn't. And this, of course, doesn't apply. If you own Apple and you own Tesla, and you don't need to be really digging in extensively, but the things that are a little more opaque, certainly micro caps and certainly things you're new to, a good rule of thumb would be spend 4 hours a week per ticker, knowing what you own off market. And that will sort of tell you how many stocks I should own, if that makes sense.
That was a really good,
Um,
yeah, that was a really good distinction you made, by the way, of if you own an Apple and a Google, it doesn't really require as much. But if you own those smaller cap stocks, like you said, something more opaque, damn, it requires a lot of research before you make an investing decision.
oh, no.
And yeah, I agree with you. That's why I like the book. I agree. I like the book because I agree with everything. No, no, I learned a lot. That's why I liked it.
It came from pain. That book was written over
Yeah,
10 years. I was 10 years into my personal investing journey. I had lost millions of dollars, literally, at 2020 specifically in 08, and I had made millions of dollars. And I really wanted to reflect truly on here's where I made money, here's where I lost money, why. I'm now 35
yeah,
years old. It's 2022, and I finally put it into a really good package. It's kind of a manual, a guide that I had a really good mentor, and he said, write it for your 18-year-old grandson and say, here's a book to read at 20. Please don't blow your brains out through your 20s and 30s like I did. Figure this shit out at 19. You are going to be golden by the time you're 40 years old.
that's great. And another thing you mentioned in the book, nothing more than 25% of your portfolio position. I know a lot of people say nothing more than 5%. A lot
Oh,
of
yeah.
people comment on the channel, they go 5%, 5%, 5%.
Mm-hmm.
All right, I guess I don't adhere to any of those rules. I have some positions that are humongous.
Yeah.
Uh, Probably like that around 25, and 25% in my portfolio is quite large if I own something.
Mhm.
So I have, some people own VFV or VOO,
Yeah.
ETFs, stuff like that. What do you feel about someone who has a 3 ETF portfolio? They have 70% of it in VFV, 10,
Yeah.
the rest allocated in XIC or something. Is that the same risk, or is it because it's an ETF, it's so broad? Is it more of a rule for single stocks?
It's definitely a single stock rule. You could say a sector rule as well would be
Oh,
important. So if
yeah.
you have an ETF that's just a concentrated NASDAQ 100, or, S&P is kind of a different story. But if you have a TSX 60, you know that's going to be weighted equally with financials and energy and resource and tech. So you pretty much covered check the box of diversification. But back to even like I mentioned Druckenmiller, funny enough, who's a great guy to go on YouTube and listen to because he exposes the myth of diversification. Now, one has to be careful. What did Warren Buffett teach? Be an expert. Experts in this world, if you're the world's greatest X, you're going to be successful. Jack of all
Yeah.
trades don't get any credit. So if you have a portfolio spread across 200 names, you probably have some downside protection. You'll probably grossly underperform the general market. So really good stock pickers, they do, like the fund I just mentioned, Druckenmiller. I mean, I think he had like a 30-year span averaging 30% a year. Well, if you go into ChatGPT and go, if I invest $5,000 a year and add only $5,000 a year and only make 30% a year for 20 years, you'll be shocked at the power of
Yeah.
compounding. So the best tool I was ever told, and this is a long time ago, I will gladly share it with you and any of your listeners, is somebody gave me a bare bones basic Excel spreadsheet. And it's literally an asset tracker with a 1980s pie graph. And you literally go, here's my HHIS, here's my, you name it. You name all of your ETFs, and then they'll give you a 30,000 foot view visual physically. Here's my house, my life insurance, my savings account, my boat, my cash, my stocks, you name it. And then every decision now you make, you go, how's it going to affect my net worth, which is powerful. Save that
Yeah.
on your computer every quarter, create a new tab. But most importantly, I'm going to go all in on MSTR. Okay, no problem. So now you see a 99% pie graph, and then ask yourself, if Bitcoin goes to 60, okay,
Yeah.
Am I wrecked? And the short answer is yes, you are,
Yeah.
because you've chosen to not diversify. So you can absolutely focus and consolidate, but you have to be willing and able to accept the risk. Another great saying out there is the true experts, they win when they're right big. When they're wrong small. So what does that mean? If you are a stop loss investor, which I truly don't recommend. I recommend buying quality that you never need to sell. That's a life hack unto itself. Have kind of this 5+ year minimum that'll eliminate 99% of bad choices for you. But the diversification question is only something you can answer. And the best tool I would strongly recommend, I'll hopefully get it to your listeners that want it. It's a $1 Excel template. Stick in everything you own, get a visual of how it actually is represented relative to your net worth. Let that guide your decisions, because you'll be shocked if you're going to go buy a new Porsche 911 tomorrow. You're actually going to go, okay, I'm going to plug this into my net worth tracker. How will this affect my net worth? And it's a very cool tool to make sure that your day-to-day decisions in your portfolio and in your life behoove your overall net worth. And that includes not YOLOing GameStop options because you read it on Twitter that it's something you should do, right? It's an easy way to go broke.
Email me that after we're done this podcast. I'll put it in a link or something. People can download that, what you're talking about.
It changed
So
my life. I thank God for the guy that gave it to me probably 15 years ago. It changed my life. So
yeah, that's super cool. Let's hang on diversification just a little bit before I move on to rule number 2. You quoted Warren Buffett in the book saying, I'm going to completely butcher this, but something like he reads 15 newspapers every single morning, but then he does like 3 trades that year, right? So it's about
years.
acquiring the knowledge, but then he's still, like you said, he's a specialist in a way. He has his lane, he stays in it, so he is kind of concentrated. He always tells people buy the S&P 500 and just chill, right? Like just go as diverse as possible, but his own practice, what he applies is far less diverse, and because he kind of has a lane, he doesn't go outside his circle of competence, as he calls it. So I work similar in a sense where I do have an ETF. I do have a VFV. It sits there, and I just kind of and when I first started investing, it's just an easy way to start, but it's become more of okay, I'm good at technology. I work in advertising, so I have a fundamental understanding of anything associated with advertising. So that would be the Google, the Metas, AI, all that. So typically that's where my investing goes into. So now suddenly I'm concentrated in a handful of companies that are in my circle of competence, where I'm doing the 100 hours of research by accident every single week, just because I'm deep in it. And I don't talk about it too much on the channel, because if you talk like that on social media, you get a lot of backlash being like, you're too concentrated. But I built my wealth doing that. That's how I make money.
You're a specialist.
Yes, I'm a hyper specialist. I'm not making bank off of VFE. That's just a cool thing I have that'll go on autopilot, and I'll check in on it in 30 years. But really, the movement in my portfolio has always been these concentrated investments into select companies during certain times. That's how I operate. I talk a little bit more about it. You talk about sort of oil and stuff. Do you have an area where you feel like you're a specialist that you kind of go deeper into, like a concentration?
Without a doubt. I'll answer it in a sec. I wanted to almost give a quick shout out to, Adriano, who I think is changing the world with the concept, which I would call the Buffett concept, which is critically important. And that is that, and again, Buffett said this, I'm sure he said what I said, if he's not willing to stick that ticker in his portfolio and look away and get no quotes for 5 years, he won't touch it. So what does that mean? Well, if I speculate on a hot potato and I'm buying XYZ stock today because I think it's going to go up, which is the most vague, ridiculous thing. I don't think it's going to go higher. Horrible reason to buy a stock. If you couldn't get a quote for the next 5 years, 60 months, if you were not able to get a price on that stock, would you buy it? You'd be shocked if that was your one and only guideline to whether or not you buy it. And what does that mean? Well, the commercial real estate guy goes down and he buys $1 million building because he's going to make 10 grand a month in rent. Well, the next day, does he give a flying crap if the building goes down to 900? He could care less because the rent's coming in. So what Adriano's cracked into, and what I think a lot of people are finally realizing, is when you buy an asset that's paying you, and dividends aside, and return of capital is a separate thing. It's a whole other conversation. However, which is important. People know the difference between return of capital and dividends as well, and total performance,
Yeah,
of
yeah.
course, and still trying to time markets. But the point being is here's my answer to your question. If you go buy a classic 1967 Eleanor Mustang, you put it in the garage, you pay 500 grand for it. Would you trade that car for that 500 grand? And if the answer is hell no, that's a family heirloom, those are the only things that I buy. So my wheelhouse, I understand gold very well, studied it for 25 years. I understand silver even better. I understand copper even better, which is the new oil of the world. I understand oil very well. I understand nat gas very well. I understand uranium very well. Yes, that's a basket of commodities, as it were, hard assets, but they're measured against the dollar, a fiat currency that's being debased in real time and being devalued at an exponential level. What does that mean? Well, since 1913, creation of the Fed, the dollar's lost literally 98% of its purchasing power. Since 2020, it's lost half almost, because they've essentially doubled the monetary supply. So why did gold just double? Well, because they just doubled the amount of
Yeah.
dollars. So I am like 99% now energy, gold, silver, copper. Last year, I was about 95% silver, which was I've been shouting that forever. It was one of the best performing assets. I had nothing to do with that. It finally came to where I was. I had been buying it forever. It came to me. I reached a point where I thought, okay, now it's fairly valued. I've now rotated into energy again because it's been so hated for 10 years. So sorry about the long answer, but your response with you understand the meta business model is exactly why you should put away family heirlooms in your RSP or TFSA and literally let your grandkids sort it out, because you get that
Yeah.
model because you're in the minutia. You're literally servicing clients that are basically in the same ecosystem as the meta clients. Well, you're a thought, you're a subject matter expert. So why on earth would you go and start, speculating on copper companies when you don't have any exposure to the business? I've seen the inner workings of a copper company. I can put it away. I can do the 5-year test. So 100%, I'm hard and fast. I'm a hard asset guy, unfortunately, to the core. It has served me well. The reason I am is because, for the sole reason that if I lost my sell finger, if I lost my hit the bid finger, I'd be fine. So I buy
Yeah.
things that if I have to detach from the sale, I'm okay. And that's, so think of your, I guess what I'm trying to say ultimately is, when you rent a car, you drive it, you bring it back, you'll never see it again. You don't care. That's how most people treat stocks. When you buy
Yeah.
a car, you care because you have to resell it. You still care about door dings. You got to maintain it. When you buy a classic car, you really care. And in fact, the car is worth more than the money. So there's your answer, is if the meta shares in your account are worth more to you than the dollars, if you sell today and you put it back in the account, what are the dollars worth? You could be outperforming in meta right now. That's an investment. That's my definition of an investment, is it's better to you than cash.
That's great. All right, that's a great way to jump into rule number 2. The trend is that's fantastic. Rule number 2: the trend is your friend. So let's walk through that.
Well, I don't know how else to say that you can be the smartest guy in the world, but if the market does not agree with you, it doesn't matter. And there's what's that great old saying that the market can remain
Oh yeah,
what is it? Yeah, it can remain in a main
irrational
longer than,
longer than you can real solvent.
precisely. I'm sorry, I forgot
Yeah,
it. It can remain
yeah,
irrational longer than you can remain solvent.
yeah,
So
yeah,
2020, when the world locked down, I basically bet almost everything on what was ridiculous in hindsight on a big market crash. Oh, of course I'm right. The world's going to close. Earnings will be disastrous at the end of the year. No one's going out to restaurants, airlines. It's all over. So what do? I go long $1.5 million, put options on the market and call options on the VIX, on volatility of people panic selling. Best year in the equity markets ever. Not ever, but in recent memory.
yeah, 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 yeah.
Was that rational? That was irrational as heck. That was everybody at home in their sweatpants becoming GME and AMC expert traders and trading friggin' Bitcoin on their iPhone with credit card funded accounts. So
Yeah.
we entered a new phase of mania in 2020. I was rationally trying to bet the common sense trade. The market did its thing. At Christmas time, I chopped a massive, massive loss. Went, okay, well, I wasn't wrong, but the market didn't care, right? So if you're a long investor, you better understand how to be long. If you're a short investor, you better understand how to be short. But more importantly, you better know where the tailwinds lie. You better know where the underlying macro energies are pushing things, because let's be honest, the market is literally just human psychology on display. When you look at the Dow and the S&P every day, that's quite literally, hawkishness and dovishness and bearishness and bullishness. It's people feeling greedy and feeling fearful. So if you can curate your Twitter, which is such a great tool, really like put in the right search terms, the algos will kind of take care of the rest. Follow some amazing people in your wheelhouse that you're interested in, track down those people, follow their Substacks, get their books. You can really create a beautiful place in the morning. You can go on Twitter at 5 a.m. and get a really amazing temperature of the trend, right? And right now, like for me, the trend is 100% energy, and I'm plugged in. I'm feeling the pulse of the WTI market, the night gas market. Before most people are out of bed at 6 a.m, I've got an hour and a half of pulse reading, of clinical diagnosis of where this is today to confirm my thesis, bigger picture, that the trend is my friend, that I'm moving in the right direction, because the pendulum in that case has swung so far 10 years into the ESG, electrification, et cetera, that all the while the consumption, for example, in WTI has gone up every year globally and continues to. So there's an opportunity, there's arbitrage in a broad sense. So no matter how smart you think you are, the trend is going to trend, and you have to roll with the punches. And when the sea is moving in a certain direction, it's a heck of a lot easier to flow with it and to sort of roll with those punches and move with the waves, so to speak. Because when you're in a great big ship, you have to learn to adapt to those waves, right? And if you're fighting them, you're working 10 times as hard.
Let me think through this for a second, because I agree with you in some aspects. I know you're in commodities, and don't commodities work in cycles a bit? They go through sort of
extreme cycles,
right? So trend is your friend there, I guess. You have to pay attention for enter and exits and stuff like that, and making sure you know where you are in that cycle. I feel like sometimes tech works in cycles as well, where they talk about different bubbles you enter and exit. How much do you think the average retail investor should pay attention to trends? Speaking of 2020, I did very well in 2020. I had the opposite experience because it was just a giant sell-off, and it was an entry point for me. I was working in capital markets at the time as an advertiser, so I'd started seeing a giant influx of retail investors versus institutional investors. So once again, I was seeing something that I was available to information that other people weren't at the time, because I was working in advertising. I was seeing that. So it was just a money dump for me. It'd be like, oh, everything's just going to do a giant U-shape and go right back up because they're flooding money. You saw the trend of people becoming pajama investors. That was a great way you put it. So I was able to jump on that trend that just stayed there. But for the regular retail investor, though, should they be watching this? If someone doesn't have the proper time, would you just tell them, avoid trends, just pick something that is the luxury car that you have and keep buying your luxury car, that something that's not affected, that if you just walk away for the 5 years? Because I don't know if someone could track those trends if they're working a full-time job, because you're in it, I'm in it. What's the realistic possibility someone who's working 9 to 5 with kids would even be able to capitalize?
You're 100% correct. So to the average investor, everything that I just said refers to the speculator. And I should have made that clear. My book really is about speculation. It's about timing. It's about trying to differentiate gambling and the stock market, and trying to be a proficient speculator, which is a technician, a timer, being surgical and moving with waves, etc. Forget all of that for the average working Joe, 100% of it. What they need to be doing is let time work for them. So the biggest mistake I see common investors make is trying to time the market, when in fact it's about time in the market. There's a world of difference between timing a market, time in a market. There's Buffett again, and Munger, and the whole Benjamin Graham school of thought. Buy quality, let time do the work. So 1,000,000% you are correct. And thank you for making the differentiation. I'm wearing a speculator hat. That's what I do. And I love, because I'm scratching an itch every day of trying to time. That's because I'm a weirdo. And I've been...
No, I agree with you. I love it. That's what I do too.
Yeah, it's a weirdo thing to do. It's I'll be honest, trading, let's just say trading in general, is probably the hardest way in the world to carve out a living. So all the people that want to be traders, forget it. Get good at your craft. Trade as a hobby, perhaps. And maybe one day, like it did for me when I was young, it'll surpass your income. You can pursue it. But if you start treating your trading as a fun hobby that can generate an income, I think you'll do a lot better than all these guys, the pajama traders that try to think that they're going to make trading their living. There's no harder way than making money when you're relying on gambling to make a living. So no. So average investor, here's number one. You pick absolute like totally non-negotiable quality, 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 and then get out of its freaking way, right? What does that mean? Buy your Apples, buy your Costco's, buy your Visas, buy your Teslas, and get away from it, because you're the worst detriment to your trading account if you think you're going to be swing trading and Momo trading tech stocks against algos and hedge funds. You're not going to beat them.
Yeah.
So be in the market. And when people say to me, I'm going to throw 10K at Bitcoin, what do you think? I go, stop. Don't throw 10K at anything. If you love something, start with 1,000 and buy slowly over time. Well, and it boggles people's minds, and it amazes me because very few people can time. Again, the psychos out there that try to do it can, very few do. But people that use time to their advantage because they are able to, because they bought quality. So what does that mean? They're detached from the fear of having to sell, right? It's a very freeing position. When you buy I mentor a lot of old guys that are retired and they're learning to trade. And what I actually tell them, and it's an amazing tool if you want to be a trader. Let's say you're in love with Costco. You love everything about the business. You're going to hold it forever. Well, start trading a company you love. Why? Because if we get another Lehman Brothers like meltdown and it halves on you, you don't really care, because you'll just take more cash and just keep averaging down and buying more and continue with your plan and continue trading something. But in other words, the halving of the asset wouldn't necessarily irk you. So what a beautifully freeing thing. When you're speculating with things that you don't have 1,000,000% conviction on and they go down by 20%, it's not a fun feeling, because now every morning you're like, should I sell it? Every morning. It's torture.
Yeah.
And you've been there. We've all been there. Don't buy things that you wonder if you have to sell if they go against you. Buy things that you are excited about if they go down, because you're buying it cheaper. What a concept. It's so simple. It's hard in practice, but I only buy gold, silver, copper, uranium, oil, gas, literally, Gary, because I want them to go lower so I can buy more. Simple. That is the world's easiest thesis.
This is a dumb thing that I do. I don't gamble. Ever. But when my friend,
not worth it.
It makes no sense to me. But when my friends would go to the casino, I would always just put like $20 or whatever it was on red. I would always lose. It'd always come out black. And I'm like, oh, I'm done. And then I just wander around the casino for like 4 hours while they lost money playing blackjack. So I always did a thing where in investing, at least once a year, I would do a relatively just fun investment. So I think last year was some stock called Wolf Speed, garbage. It was just some like totally like, I don't even know. But I put really just like money from like my kids' piggy bank on it, just to be like, here's a dumb thing that I can look at. And it always just serves as like a reminder of like, this is why you don't do this. It's so small. Like I'm talking about gas money here. Like it's like nothing, but it just shows that when you divert from your investment strategy, your thesis, this is what happens. So I always kind of keep something there, and it just stares at me in my portfolio. And that little $100 investment is like the biggest detractor from dumb decisions. It just sits there and you just watch it and you go, that's why I don't do that. And I learned that the hard way when I first started investing. I actually lost real money early. Yeah.
Can I give you a quick analogy that's really helped me a lot? And I don't know where it comes from. I think I just thought of it many, many years ago. And what it is, I do have it in the book, is that the difference between the amateur and the pro investor or trader in the market is that when you go to the casino with $100,000 and you sit down at the blackjack table and all you're trying to do is make 10%, if you get a system, same with poker, even roulette, arguably, you show up with 100K chips, you put it down, you only need to make 10%. You can do that every single night. What do amateurs do is they show up with 10K and they will try to make 100 and they lose it every single time. And that 10K could be $100, could be $1,000, but it's the process, it's the mentality, it's playing small. So what everybody does is they throw $1,000 at shitty Vancouver penny stock, goes to 600 and they hate their life and they watch it on their TVSA for 18 months. That's insanity. What if you had a $300,000 real portfolio and you clunk that all in over time, do it in tranches into Visa, any good ETF, anything that's been any big box company, let's just say, for argument's sake. You put your 300K in over time. What if you make 10% of your money? Well, guess what? If you can do that every month, you have a decent living now. So your entire process needs to be evaluated. in terms of thinking you can show up with a pittance and beat the house versus showing up like a bully and only looking for a crumb. It's very easy to do.
Let's talk a bit about that. Like you mentioned, like buying in tranches, like which is basically just you're buying in portions
Mhm.
on the way, and you're either buying in slowly, but I liked how you also said you sell slowly as well. You get out of a position
Absolutely.
at the same way. You don't exit. Um, let's want to talk a bit about that. I like that. I think I do something similar. I could probably go a little bit slower
Hmm.
buying into things. And I could probably just go slower in both directions, buying and selling. So I'm better now than I was 5 years ago. I was really bad at just sharp in, sharp out.
Yeah.
But now it's more slowly down, slowly out.
Yeah.
Now I'm a lot slower. Talk
Yeah.
a bit about that. Was that a hard lesson learned? Was that something, you know, just talk about that, the
That's
importance of that.
where I stopped losing money, Gary. That's when I
Yeah.
stopped losing money. So going back to the comment I made, if you act like an institution, there's no self-respecting institution on earth that clunks into a company on a Monday and then a year later clunks out in a trade ticket. It doesn't
Yeah.
happen. When I give kind of an example, even in the book, I believe like Ackman, when he had just at that time got out of Herbalife, he had $2 billion, I believe it was, on the trade. He sold the stock, he exited, he distributed back to the market over the course of like a year or more. Why? Because two big reasons. So let's break it down because this is so big for investors, new or old, small or big. What do I hear all the time? I bought too soon and then it went down. I lost money. I sold too soon and it went up and I didn't capture the gain.
Yeah.
Case in point, if you would have bought slowly and it would have started to collapse on you, now you're averaging dollar cost averaging cheaper. You're protecting your capital. You're convicting yourself further as it comes down, it bottoms out. You're buying more. You've lowered your cost dramatically. Then it pops. Let's say it's a year later, it could be a month later. It doesn't matter the time horizon. Now you're at 30% gain. Well, click sell. And then it continues to do its real run up 90%. You've just lost it all. So it hits this 30% gain. Okay, wonderful. I'm going to peel 5% off, take a nice little gain. It's up another 2 points. And I say, wow, 5% off. Beautiful. Next day, next day, next day. I just made the mistake again last year on silver. I had basically my net worth in PSLV at $10. Silver goes from $23 to $55. I'm selling it, start selling it there quite aggressively as it hit 55. And it's got to be the top. It rallied to 80. If I would have been even more disciplined and sold a little slower and tranching my distribution back into the market, I would have captured another, in that case, like close to $1 million. So I made that mistake as recent as October, November, December of 2025. So there's a big thing that separates guys that make money and guys that think that they're traders and investors. And that is that they buy slow and they sell slow. And it sounds funny, but if you look back and you were to dissect your mistakes, it's generally that you bought something on a bad day, it went down, you watched it red, it finally got back to your cost basis where you're literally not red anymore. You chopped it, you got out only to
Yeah.
watch it rally as it would
Yeah.
have
No.
done with or without you. And you go, oh my God, I bought it, I was wrong, then I was right, and then I sold, and then I was right, and then I missed everything. And it's like, that sounds so hilarious, and that is so common, and I have done that 8,000 times, and I don't do it anymore because I make myself, if I have 100 grand for MSTE, I'm only buying 3 to 5K at a time, full stop.
As soon as you said that, I can think of like four different tech stocks I've done that with,
Yeah.
and it just killed me so much.
It's
And
psychological torture.
uh,
It's not worth the mental pain.
and you know the
Letting
worst
a
thing
red
that bothered.
stock daily is
Yeah.
not good for morale when you're an investor for a living. So
What bothered me the most was because you said getting back up to cost basis. There's this one tech stock. I believed in the company, like hyper believed in it and what they're doing. And I still sold it at break even just because it took longer than what I thought.
because you were weak and then you waited while it was red.
And it just killed me. And I saw it like triple, quadruple in price. I was going,
And
Jesus
here's what's
Christ.
sad is that
I'm
you
like,
were,
I knew that's what I thought it was gonna do too. And it's just
yeah,
like I'm
but
such an
here's
idiot.
what's
Yeah,
sad about it. It looks like my PSLV
yeah,
trade last year. You were right. And yet you
yeah,
didn't make money, even though you
yeah.
were
I know.
right. And it wasn't even that your timing was wrong. It was that your strategy, your execution, your having a plan back to rule one was wrong, right?
Yeah,
You didn't practice quality tranche buying. So just pretend you're Bank of America and you want
yeah,
to initiate a position on XYZ. Doesn't matter what the instrument is. That people put way too much credence in which ETF, which stock, which sector. that actually matters very, very little. It matters that A, you believe in it, and B, you consistently buy wisely over time. That's it.
You know what I learned from that though? There's one tech stock that really sticks in my head. It's fine because I'm doing fine. I'm not gonna complain. Everything's great,
Yeah.
right? But
And it's
it
all
just
lessons. It's all valuable lessons, right?
it's
So,
but it taught me to put blinders on more when I invest,
mhm.
cut out market noise. So I stopped listening and reading market news on the daily after, especially after I'd bought something. I think that affected my decision because people were projecting, oh, this company's doing this now, this. And I kept thinking, no, they'll be fine because of
Mhm.
the reasons I'd come to. But I'd let that seep in a bit for like, oh, maybe they're right.
Yeah.
And I should probably get out now that I'm at break even, or I had a little bit of profit on it, but not like how I should have had.
Yeah.
So I cut that out. The second part is, and now it's a different scenario where, and this was before the age of investment social media, before you had so like platforms like your Blossom and stuff,
Mhm.
where everyone's now just talking to each other. Now it is exponentially worse, where if you make an investment decision and you make it public, you will get everybody giving their opinion on
Yeah.
top of the market sentiment giving their opinion.
Yeah.
And I've always learned I've never seen anybody predict any. Like, if you've done all the research, a random person that probably doesn't have something that you don't know, they're not telling you something you don't already know, and the market can't predict the future. And if you bought it for your underlying thesis, so I guess this year for 2026, I've completely taken myself off of all social media other than YouTube. I don't really look at market news a whole lot surrounding stuff that I've already bought into because I
Yeah.
go, it doesn't affect unless, I'm trying to time it a bit, thinking, oh, maybe I can time out a future dip or something like that, or
Yeah.
start entering. Like I look for buying opportunities for market news. What do you think about that? How much do you ever look at social media? Because you were saying chase the trends. Trends are followed sometimes by what people are talking about as well. And is any of that, or are you just kind of like you do your own research? Whatever you come to is what you act on. The end. Everyone else can just go
Yeah.
eat it.
So you may be surprised at this. So believe it or not, and I'm with you there. There's a wonderful saying in Vancouver that when the doorman is giving you stock tips on a stock, it's probably time to sell because the doorman is the end of that economic cycle. He's the
Mm.
bottom of the economic trough. He's the last to know, etc. I am plugged into that noise and I use it as a contrarian indicator. So, for example, all you hear about right now is silver. Well, all I've been talking about for 20 years is silver. And it's like kind of like when you discover Nirvana in 1989 and then the big single comes out and it smells like Teen Spirit and the whole world falls in love. Very easy to fall out of love with your favorite indie band when they go mainstream. So
Yeah.
I very much carry that energy into the markets and I don't like crowded trades. I love buying ignored, hated trades. And I truly gauge that yappy public meaningless sentiment as my contrarian indicator, literally my 180-degree indicator, 100%.
Is that an indicator for not just selling? Is it ever for buying? So when you're not hearing anything or you're hearing negative, does negative sentiment ever go, maybe I should pay more attention? This could be a good buying opportunity. How do you use it on the buying side? Because I know for selling, you said it's a good time, it's
Yeah.
oversaturated. It's a time to talk about that.
Yeah. So I mean we'll timestamp this will out me, but we'll timestamp crude oil is $57, actually probably 58. And Goldman Sachs just reported it's going to 40. There's a major talk of oversupply. The Canadian oil sands are talking about dying because of Venezuela, which is 100% not happening. Um, the S&P 500 amazing indicator used to be 17% energy. The S&P 500 today is less than 2% energy. Yet you consume the same amount of energy you did in 1990 and 2000. In fact, you touch petroleum products like 50 times a day. You don't actually touch copper, uranium, or gold. Well, sorry, copper every time you hit a light switch, but you don't touch gold. You may not even touch Meta if you're not on social media. So the point being is the headlines right now, the macro, forget the public for a second, the macro crude oil headlines have never been worse. Like the brightest minds that I know on Twitter that are oil analysts are bearish. So I view that because historically, this isn't my opinion at all. Historically, that's the bottom of the V.
Mm.
Generally, when the sentiment is the loudest on the bearish side is often the bottom. And when the screaming and the shouting is the most maniacal, think Bitcoin at 125, is usually the top of the rollover. when the public is screaming and the institutions are trying to just suck in all the people for liquidity purposes, that's your rollover every single time. So, and this is going back 300 years of market data. This is not my opinion. So I absolutely use broad market bearishness as my beginning of slow, important entry to the upside, slow bullishness. So crude today, it's January 9th, 57, $58. I'm totally convinced this time next year, it will be a lot more, and we'll see what happens. But I think the market couldn't be more negative on that particular commodity. And you could almost say the same for the agricultural sector, a little harder to play. Like there in the US, there's wheat, WAT, I think it is. And there's other ways to buy soybeans and wheat and things like this. It's not really easy because it's a tiny sector, but it's overlooked. It's unloved and overlooked and underrepresented in people's portfolios. That's for me, that's what's made a living for me, frankly, for the last 21 years.
I know this won't be relevant for a lot of people watching, so if you're watching this, what I'm about to ask, you can skip ahead. But this is for me. I had Chris Frostad on. He's CEO of PurePoint Uranium. He's also hosts the PurePoint, the Uranium Spotlight podcast, wrote Behind the Curve, and he's been talking. And I watch his content, and
Yeah.
I read his Behind the Curve. It was a great breakdown of there being a supply and demand issue with uranium, and how it's that contracting cycle is going to start beginning sometime soon, mid 2026, maybe end of 2026. We don't know, but there's going to be some sort of lift in uranium price that's coming, and it's undeniable because of basic supply and demand. And when you're dealing with uranium, there's issues in Kazakhstan of getting just dealing with their government. In Niger, there was issues of just shutting down mines, right?
Yeah.
And then we have Canada and Saskatchewan, the Athabasca Basin, and all the stuff that's going on there. But you just can't get mines up running fast enough to meet the demand. You also have that 12-month refining process for uranium to actually turn it into uranium. So he's just like, there's so many elements happening that when the supply and demand squeeze happens, it'll be drastic, and it'll just elevate the price.
Mhm.
How much do you believe that's going to happen? Do you think there is a uranium cycle starting? Do you think there'll be a price lift? There's already been a jump in, you look at the spot price, you look at ETFs, holy spot. There's been a giant, massive in the last couple of years. But where do you feel about uranium and where it's kind of heading in, by the end of 2026? You said oil is going to have a jump, but for
Yeah.
uranium and other energy, what do
Yeah.
you feel about
So
that?
it's a good question. And obviously I don't want to belabor the uranium too much. I'm far from a subject matter expert, but I'm close to a lot of uranium executives. I was lucky to be part of like little small piece of next gen when that was very formative.
Oh
It's
yeah.
like a $10 company. I own Cameco. I own the Sprott Trust U.U for all different reasons. Now, a couple of points I want to make that are pretty important. It's a relatively inelastic market. What does that mean? Like oil, a great saying is that the best cure for low prices is low prices. So if uranium gets low, discovery and exploration and even mining to a certain extent will be somewhat suppressed. That will shut supply. All of a sudden, everybody looks around, all the brokers and traders go, oh my God, we're a supply. Spot price jumps $2, $3, then the miners react. And it's such a yo-yo, very volatile in both direction business. Now, the miners have already had the move, so I wouldn't be speccing into juniors. Personally, I think it's overblown. I love the Athabasca. Another friend recently sold a company there. I know a lot of young executives that have got junior, like micro caps there that they have all their net worth in it. Now, here's my question is one, the mid cap of the space already had its run, so it doesn't have any near-term juice. The spot price is a different story. If I was a bull, I'd probably just buy CCO. I'd go right up the top of the food chain, buy Cameco, forget about it, or even better yet, just get straight exposure, no mining risk. Mining is the hardest business in the world. I'll say that flat out. It is a nightmare. Even in Canada, it's the hardest business in the world. Forget being in Namibia or
Yeah.
Venezuela. It is the hardest business in the world. So if you
Yeah.
want to bypass all of the mining risk and the G&A and the fat cats sitting on Bay Street and drinking cocktails on your dime, go buy U.UN. Get dollar for dollar, unlevered, allocated, segregated exposure to you. Brilliant, brilliant, forever hold. I believe, though, quick caveat, the near-term reason to be bullish is dramatically overblown. Here's why. They're not putting up SMRs anywhere. It's not powering that much outside of like nuclear submarines. And if you look at, say, take data centers in America, I don't know the exact number. They're in around 50% powered by nat gas right now. Well, that's not going to change. Nat gas is 330 today, right? So in other words, uranium is the future. Absolutely. So are electric cars. Are we there? No, we're probably 20, 30 years away from that. That's mine. And people think it's 5 years. I think you can add 2 decades to the most bullish estimates. So uranium in our lifetime, 1,000,000%. Uranium in the next 5 years, meh. I'm totally meh because Gary isn't burning uranium today. That's my very simple way to say you are burning that gas. You're using copper. You're using crude oil, gasoline, petroleum products. You're not burning uranium. I don't think you're going to burn uranium until 2035 at best when these SMRs, because when 2011 happened, I've been a bull a long time. And when Fukushima happened, I think it was 2011.
Yeah.
How old is that reactor? It's like 1950s tech. So what that did is it totally screwed the market and public sentiment around the safety when it was like a dinosaur infrastructure. So we unfairly got punished. The buy of a lifetime in 2011, 2012, 2013, 14, 15. I think a lot of the juice has been squeezed. I don't think it's the big performer like a lot of people say, but I think it is something to be mindful of. But I think what people seek in uranium, plain and simple, and albeit now there's no reason to buy it, but I think nat gas offers in 2026 what people think uranium is going to offer.
Do you think then that sentiment, because I've had quite a few, I've had Jesse Day on Commodity Culture talk about uranium. I try to ask people about it
Yeah.
whenever I can. Do you think it's people maybe overly hopeful there'll be some move? Because you said it is kind of an inelastic market, so they're invested in, so there is a built-in bias and hopefulness, and maybe they're kind of missing from what you see, maybe a bird's eye view of, wait a second, it's in nat gas right now, it's in crude oil, that's what I'm seeing. Like yeah, I agree with you guys, but I think you're about a decade too early. That's sort of what's happening, you feel on your end then, I guess, to summarize it.
I picture our grandkids going to Mars on a spaceship powered by fission,
Yeah.
but I don't see it in our lifetime. I used to tell guys 15 years ago that a pellet of enriched uranium the size of a piece of dog food has more energy in it than something like 45 barrels of crude oil, which is 45 gallons per barrel. So the density of uranium is from the future. It's otherworldly. And that's even the reason why you can't fly airplanes with lithium ion, because you'd need 40 times the weight of a battery pack that kerosene, typical
Yeah.
jet fuel, which is basically diesel, for the pound for pound power thrust you get. So the output per pound of uranium is from the future. We're just not there. We're not there. So it's a total buy and hold forever. I think the hype, it's easy to get sucked into. And again, I was sucked in pre-Fukushima. So I get it. I think it's maybe almost too easy to fall in love with. It's not something to ignore and forget about. But I think the hype of the exploration game today, I think there's enough. I think we already have, look at Athabasca. We have so much already. It's not easy getting out of the earth. It's not easy processing it. It's not easy even being on the market as far as finding buyers at certain times. That's why I call it inelastic. So I just think, skip the middleman, go right to U.U, and just have exposure. You play up, you play down. You don't care if it comes down. You do your dollar cost average thing. But I'd just be very careful with defining that a exploratory spec company that thinks they're going to find the world's next Cameco deposit is a very different business than Cameco that's mining the asset. So make sure people don't really often give enough credit to the fact that mineral and resource exploration is not mineral and resource mining. They're completely different worlds. So make sure you know a little bit. Back to being a subject matter expert, make sure you're familiar that, because I always have guys say, I just bought a gold mining company in the Yukon. And I go, they're not mining. What do you mean? I go, they're prospectors. They're poking holes in the earth, trying to get grams per ton high enough for investors to keep buying, so that maybe 30 years later, if they get $100 million and if they don't dilute you down to nothing, then maybe there'll be a mine. And believe me, it's 1 out of 1,000. So Yeah.
Yeah, I think there is some confusion around that. I got some podcasts coming up in the future. I think that'll explain that a little bit better of just that process of exploration to production to all of that. Like there's a funnel that you go through till you get to that top layer you mentioned about investing in. And that funnel goes from highest risk with potentially highest reward to lowest risk
Hmm.
and technically lowest reward but still reward. It's just like how anything works in life. So you're sort of, when you understand that dynamic, it'll change sort of how you invest when you're looking at least uranium as a commodity. All right, that was fantastic. Thanks. Let's move
Oh,
to,
that's helpful. Yeah.
yeah. Let's move to. Are we on rule number? We're on rule number 3. we're moving along here.
You threw out.
Focus on asset preservation. That's in chapter 6.
Well,
Good.
do you want to return on your capital or return of your capital, right? So when I said that the professional poker player shows up with 100 grand, he's only needs to make 10%. He's willing to lose 10%. He'll walk out with 90 grand. He's preserving his capital. He's protecting his bankroll. The amateur, the loose investor, the trader, the wannabe, the guy in sweatpants with the vape pen, he's investing everything, trying to shoot for the stars. He's not focusing on base hits. So a lot to be said for base hits. I like to remind myself and others that if you buy that amazing tech company and it halves, so you bought a stock, you're down 50%. Now, guess what? People don't think about this. You now need a 100% gain to get back just to even. Well,
Yeah.
guess what? That's statistically extraordinarily unlikely, believe it or
Yeah.
not. If you're holding a company, regardless that it
Yeah.
just halved, for it to go up 100% is a unicorn. So if you've already lost half your money on investment, you might as well chop it, unless of course go back to the heirloom, etc. Focus on not losing money. If you lose 10% of your money 10 times, are you out of the game? I mean,
Yeah.
so back, a nod to Adriano. He's not recklessly shooting for the stars, shooting from the hip, trying to hit the next 10 baggers. He's respecting his capital so that his capital can respect him back. So I've evolved over the years to have my wildcatter swashbuckler trading Quest Trade account, and then have your Quest Trade forever account if you have to. Again, everybody has different processes and money managers and ways to do it, but my God, man, separate the money you care about, because when you are gambling, in the true sense of the word gambling, the Dow, the bio, all these things talk about if you create an inhospitable money or inhospitable environment for that energy, that currency, it's not going to love you back. Plain and simple,
That's
it's not
just,
going to love you back. So
that's,
just make sure you're treating with respect, and preservation of capital is arguably far more important than return of capital. And I think it's very underrated.
That's funny. I have a Questrade account that I have for wilder investments as well. I've separated it as well.
That's
That's nice that
perfect.
you said that. And you're right. Yeah, preservation of capital is more important. It would add 100% return if you have a 50% cut.
Yeah.
That's a really good point. Let's move on to rule number 4. You kind of talked about this. Know when to cut a loss. How do you know though? Is
Sleeping
it
at
just a
night.
number? Is this a
No,
numbers game or there's more
this is
to it?
where the science becomes an art, in my humble opinion. I think if you're waking up with cold sweats at 2 a.m. because you're 60% down on XYZ co, that's a loser you need to cut. I think there's so
Yeah.
much energy
Yep.
that is overlooked. The brain is a tool. The brain is like a hammer. You can build a house with a hammer, or you can tear the same house down with that same hammer. So the brain is just a tool. It doesn't know. Often the gut and the instinct does. So feel into it. Ask yourself here's the answer to that question, and the answer to, do I sell something? So on last January 2025, I bought a stock. I still own it January 2026. Would you buy it today? Well, no. Well, then you shouldn't hold it. Full stop. The reason you bought it last year has left the building. Why do you hold it? Well, because I'm red. What could you do with that money? What's the time value of money? What's your sleep worth? What's the money worth? What's the tax loss worth? Right? Be careful with registered accounts, because you can't take tax losses. You use registered accounts for what they're used for. Don't speculate in them, because you can end up blowing up your room, right? A lot of people have done that with TFSA. So
Yeah.
it's really a game of, would I buy it today? Hell no. Then why do I hold it today? I guess would be an easy answer for that one.
Yeah, that's the best way. That's essentially how I look at it as well. I'll bring it back to, because I guess the most public underperforming thing I own 'cause I barely show anything public, is the MSDE.
Hmm.
And if you ask myself that question, would I buy it today? Well, I did, so that I answered it.
Hmm.
But it really always came down to me. It was like,
You believe in it.
yeah, I just I like MSTR. It
Yeah.
was really that and why did I buy MSCE rather than MSTR? It's I don't know how long it takes to recover because this
Yeah.
thing's in for a 10-year headache. I was like, I'll just keep 10 years if you know what they're trying to do. Like I'll just collect distributions to buffer that because it's going to be pain. I've dealt with companies before that are trying to do education and dealing with regulatory and legislation issues. I go, oh, you're just like you're in for a headache for 10 years. So MSCE kind of buffers that headache a bit. So I guess I answered that question with that, but that's a good question to ask. It's would I buy today after the cut? Um,
Totally.
easy. So, and the energy thing. I like that you touched upon that. I'm trying to think. It's been a long time since I've had me buy something that underperformed where I felt that pressure, but I do remember that feeling of like a sleepless night of like, what did I do? It's
Yeah.
been a while, but I kind of fixed that problem by going back to your rule of, you know, did you do the research? Do you believe in it? Blah, 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 blah. That kind of solves that problem. I feel like if you've done sort of the rules before you got to where we're at right now, you don't fall into that issue as much
Totally.
of sleepless nights, stuff like that.
If
Um,
you, well, if you had a 20-year-old assistant over your shoulder every day and you had to explain everything you're doing as you're doing it, do you sound foolish? There's a perfect little self-test of like, if I had to
yeah,
sell this to my assistant or to my underling, why I'm doing this, do I sound sound? Do I sound like
yeah,
making sense?
yeah.
And yeah, it's important that you really look at things, you really zoom out, get a journal, reflect. The Dow 2,500 years ago talked about branches and liquidity and the flow of energy and the flow of capital. And the reason banks are called banks is a bank is the two walls that allows capital to flow to different branches. And it's all energy, man. It is truly energy. So stocks have energy, money has energy, and it's you got to really zoom out and really feel into it. As corny as that may sound, it is a real thing.
I want to talk to you about that a little bit. You said if you had a 20-year-old assistant asking you a bunch of questions, would you sound foolish? I bought Google and Meta when they crashed back in like 2022 or something. And you'd look at Jim Cramer, he'd be screaming, being like, Meta's dead. They
Yeah.
just care about the metaverse. Apple put out new privacy laws. You can't even track users on Apples if you're using Meta. I was in advertising. So everybody around me was panicking, being like, hey, we make a lot of our revenue off of Meta
Yeah.
ads. And now
Yeah.
Meta just lost all the advertising they get from Apple.
Mhm.
So I started dumping money into it
Yeah.
because it just tanked, but everybody was pulling money out. And even in my space, everybody was freaking out. I looked like a moron at the time. And
Mhm.
I talked about it a little bit in my private life to people in advertising, and they looked at me like I had a disability of like, what is wrong with this guy? And I shut up very quickly. Now I do stuff publicly, which is the worst. Right
Yeah.
now, like I do actually, it's why I actually don't show a lot of things I buy because I just don't want to be
Yeah.
influenced anyway. So
Yeah.
I've kind of learned my lesson with the MST, like do never talk about single stocks you're buying ever again because it'll influence how you behave. So now I'm just mum about everything. But during that period though, I remember when the whole world, and even when I was explaining my thesis for why it's not like you guys know that everyone still has to use Meta. You know, it's still one of the biggest advertising ecosystems. You know, like I just had this checklist of stuff. I'm like, it has to bounce back because small businesses would go under. Everyone's using it. It did all this stuff.
Yeah.
I still did it. Um, have you been in that circumstance? How did you navigate that psychologically? I just had to basically stop talking about it and hide everyone from everybody
Mhm.
that was doing it, and then just basically delude myself into thinking I know what I'm talking about, even though I
Yeah.
was the only one saying everything. And the news was saying something different. People in advertising were saying something. I was just by myself on this island, and I ended up being like 800% right about
Yeah.
what I said. Have you been in that scenario? How did you navigate it? For me, it was just isolating my opinions to myself and cutting out everything else.
You're bang on, man. I talk about in the book the guy that studies a racehorse for 6 months. He's
Yeah,
cocksure he's going to win. He goes down to the ticket window. He's one guy next to place his bet on this horse. He hears a voice over his shoulder. 30 seconds for his bet. Oh, horse is looking skittish, this and that. So he changes his mind. He buys the wrong horse. He walks out. He was right. The other guy was
yeah,
wrong. He changed his minute in the last time for them. Noise has influence. Absolutely. So one thing I've done, this is going to sound crazy, is I've put my kids, my 3 teenage kids, and a bunch of their friends that are super eager to learn to trade in a WhatsApp group, and I literally screenshot my buys Why do I do that? Because it's timestamped forever. Why do I not
Yeah.
care? Because again, they're not there to chirp me. And I have a funny side note, and I deleted it because it was sarcastic, but it looked douchey. When you posted your first big MST loss video, I replied in a comment and I said, "Oh wow, averaging down at half your ACB on a derivative of a derivative of a derivative, pretend internet money. What could possibly go wrong?" And then I'm like, oh, it looks kind of douchey because I said it sarcastically, so I deleted it. But I'm like, but here I am chirping your thesis when I don't have skin in the game. It's not my money.
Yeah.
So what you need to do, this is just my opinion, hear everyone, listen to no one.
Yeah.
And my God, man, stick to your guns because no one cares about you. No one's thinking about you. We all think the world's hyper obsessed with us. They're not. They all have an opinion, but they don't give a shit. Sadly, we're here. We're responsible for our own well being. So it's like you care about your money. If people have opinion, take it, put it in the opinion box, put them all together, but do not let it influence you. That gut that we talked about has 100 times more weight than Billy Bob's douche comment to you off the cuff, which is so easy and so cheap and so meaningless. So what I do with the WhatsApp group, again, is I have a tool. So that tool, that WhatsApp group, similar to that Excel sheet, prevents me from making stupid decisions. It saves me from myself, right? I used to, like, I have a Substack now. All the oil buys I'm doing, I'm actually putting in my Substack. Why? So that when I wake up tomorrow in a bad mood and I want to sell my tourmaline, I go, oh shit, I can't. I just told my Substack I bought tourmaline,
Oh, yeah.
right? So it literally saves me from myself. So create friction points where you want to not do things and remove friction points where, you want to slide and glide and be lubed, right? But it's very easy to say if your friend comes to you and goes, man, I got to stop drinking beer. Well, is there cold beer in your fridge? Yeah. Let's start there. Maybe don't have
Yeah.
cold beer in your fridge if you want, like simple stuff. It's easy to help you, you know what I mean? So there are ways, and, people chirping in the comments is a great way to, get distracted. We're sensitive beings, right? We can't ignore it. And those words have weight, but they shouldn't. So if you're like me and you're an empath and you're oversensitive and you're overcritical, you're hypercritical, you're your own worst enemy, those comments can be devastating. So I'm a victim of them, so I have to guard myself for sure.
Yeah, that's an interesting thing because I'll go back to that video, the thing where I put my hand in my head. I did that because I was more or less like advertising. I'm like, I know
Yeah.
I can get
Oh, yeah, it's a
a
great thumbnail.
I was like,
Everybody,
man, I'll get a shit ton of clicks and
yeah,
I'll see what happens if I do like a video like that. The reaction was way too big. It was way bigger than I thought it'd be. I'm like,
mhm,
okay, well, great. I can't do this kind of content anymore because it just attracts the wrong users. And I'm
yeah,
trying to run a channel. It was more for like an advertising lesson than anything. I
yeah,
was like, okay, let's just stay away from that content. But the in the comments and stuff, it's pretty easy for me to not care about like comments like insulting and stuff because once again, this is sort of what I do. It's just skin in the game. You're like, you're fine. The problem is when someone gives kind of good advice, like you said, derivative of derivative of derivative, you're not wrong in what you said. And that's where I go, they got a point, right? And then so when you say
that's what I
something that's
mean.
fat, it's not the insult of Gary, you're a moron. It's when the smart guy like yourself says the sarcastic comment that's accurate, is then I go, they're right. But I
Yeah,
still think that was the problem I was hitting because there's a lot of and not so much in the MSC is more the Facebook issue
mhm,
when I was back then because that was a real like I had way more money in that. Like that was an actual scary thing because I didn't even have distributions to buffer it, and there
yeah,
was legitimate panic of like, oh my god, I just mess up here? And the arguments were so legitimate of like why I made a bad decision. I was actually very much that's why I had to go very quiet with it because everyone had a good argument, and then I
yeah,
just had mine, and I was by myself. Um, and I'm happy I went through that because I can navigate stuff like I do now. Is so
mhm,
that's why I can navigate it so easily. But gosh, I just want to anchor on that a bit because I wonder if other people have been in that issue before and they've lost money because they're seeing something that maybe everyone else isn't seeing because they have maybe a different vantage point. And so even when the facts might look like they're against you, your set of facts, if well researched, still hold validity, even if you're the minority. And then and it's, I guess I can take those risks now because of my financial circumstances. But when I did the Facebook one, as well off as I was now, even though that was only 3, 4 years ago. I've done well. I still did it then. Have you been in that situation? Do you understand the psychology around sort of what I'm
Dude,
saying around that?
I've I've lost immeasurable amounts of money because humans are impressionable, right? Like if somebody makes that comment to you and you go, "Oh yeah, shit, he's not wrong." That's an impression, right?
Yeah.
We're all influenced, we're all influenceable, we're all deep, like Gary and Brayden are just 10-year-old boys wrapped in these man suits trying to figure out how to live, literally. So we're all very much impressionable kids at the end of the day. So there's like, take Michael Burry, right? There's a prime example. He just shut down his fund. Why? He was literally sick of getting emails from clients saying, "You are a retard. Why are you
Yeah.
doing this?" And he's like, "Well, I'm doing it because I know I'm right. But now that you called me a retard, maybe I'm not." Right.
Yeah.
So he
Yeah.
had to wind down his clients for that reason. I'm very much the same. The noise gets to me too much. And I made that mistake even recently. Last year I made that mistake where I was uber long something that I got essentially talked out of from one guy's chirp in a phone call one morning, and it was the wrong morning. I went, you know what? He's not wrong. And it made an impression. So I would just say again, tap into that energy. It's all energy. Maybe the universe, maybe it's God, maybe these voices are people, but the challenge is deciphering. The challenge is separating the wheat from the chaff and actually going, okay, well, it's all feedback. It's certainly not all valuable feedback, but if I put it all in a soup, I'll be able to surmise my own opinions. So I almost in a weird way, I would say, be grateful for the haters because they are actually what make people great a lot of the time. They're what allow you to double down on your conviction and go, no, screw that guy's opinion. I know I'm right. Because if you are easily swayed by an anonymous voice on the internet, that's an inside job. That's a me problem. That's not a them problem, right?
I think a lot of people when they start investing, especially when you're working at, actually no, this isn't true. Even when I started with a little bit of money, the little bit of money I started at the beginning felt the same as, like $1 million. So it
Yeah.
just for some reason it actually feels the same. It's crazy. It's
Yeah.
crazy because when you first start, but it's the underestimate. Investing is a numbers game. You mentioned the trends as well. They forget about the psychology around it because the psychology, even if you have followed the trend, you got the numbers right. If your psychology isn't correct in that moment, you still fudge it up.
Hmm.
It's still there. And it's like they don't understand that's such a large portion of holding when things
Yeah.
are crashing or being patient even when things are rising, not to just sell it all. Like there's so much
Totally.
there
Yeah.
that and I hopefully we talk about it a lot on this podcast. I try to get into it, but just understanding that no matter who you are, like you mentioned, you're susceptible to it, no matter how strong you think you are mentally, because
Mm.
even if you're avoiding the noise, it still seeps in no matter what you're doing. Even if you have Yahoo Finance bookmarked on your tab and you happen to be following whatever stock or ETF, you'll still come across it. It's
Totally.
unavoidable. All right, let's go into rule number. Okay, this is a good one. Rule number 5: take profit when the trade is good.
100%. So, I play a lot more in the microcap space where if I speculate 100 grand on a uranium startup, 3 months later, it's worth 250. It would probably be prudent for me to sell half that position, right? I don't want to give up my upside, but if I can return 100% of my capital, that's a winning trade. I've just made 150% inside of 12 months. I'd be kind of crazy not to chop it. So make sure you are exercising a bit of discipline to the upside as well. Not limiting your gains, but being smart and not letting 100% gain come back down to a 13% loss, for example, which everybody just did on Bitcoin as one example. It's easy to do. It's easy to go, no, it's going higher. So how do you mitigate that? Tranches, buying in
Yeah.
pieces. This is not a black and white game, Gary. If there's anything I would love to leave people with, is that investing and trading are not black and white in and out games. It's not a hand of blackjack. It's a wading into the ocean, being exposed, getting exposure, and then deciding to turn around and wade back out slowly. It's a very fluid game. And if you can learn that, okay, I'm up 30%, you know what? I'm going to start to maybe de-risk a little bit. And then how much? Well, go back to your Excel sheet, go back to your tracker. How weighted am I? Is it underrepresented still, even though I'm up 30%? Well, then sit back and enjoy it. Is it 25% of all my money and it's just 4x and it can be life-changing money if I sell it and I go buy a condo that I can use as a rental? Take profit if the trade is good. So make sure you're not being stupid on winners as well as being stupid on losers, and treating it like a business, referring back to that that above basket of how does this, is this 5%, is this 50%, and just making sure that you're protecting your capital, you're protecting and not losing what would have been a big win. Just like it's easy to do the same in the other direction, right? Because I laugh so hard because when I said that about how many times have you bought a stock, went red, got flat and got out, and it's like guilty. It's like if we're all guilty of that, we're not, again, we're not wrong. We do have a bad process. Our process is bunk. So use that same methodology to the upside as here's base camp, here's glory land, and here's hell. Okay, well, you're going to have to straddle both places and you're going to have to go back to rule one and you're going to have a defined plan. If it doubles, I'm selling half. If it 50%, I'm selling a quarter. Have a rule. And no one can make those rules for you. That's totally up to you.
Yeah, that's a rule I developed in the last few years, just because I had to. I didn't have the issue of holding too long, so I didn't have the greed issue. I had the issue of
Selling way too quick.
trying to de-risk as fast as possible.
So that's my problem. That's every day of my life. I log into my Quest trade. I look at green positions and I want so bad to crystallize the gain to feel like I just crystallized 11 grand because I only bought it a little bit ago. And it's like, oh my God, it is a real problem. And where does it come from? I'll tell you, it comes from a scarcity mindset. I'm a poor Abbotsford street kid. I literally grew up in the hood where back, we're about the same age. And I have unfortunately, and that's where the genesis of the book is having a poverty mindset will make you chop your winners way too freaking early. And it'll also make you hold your losers. Why? Because you don't want to lose money.
Yeah.
It's the same guy that hates going to the casino and losing 100 on blackjack and all your friends are doing it. Why? My humble opinion, it's the joy of winning is not sweet enough to override the pain of losing. So we tend to kill early, which is a textbook. I'm going to call it rookie, even though we're both seasoned. Selling early is a rookie mistake, right?
Yeah.
You should. There's a wonderful saying, you can Google it, and it's an age old Wall Street saying. It's chop your losers quick and let your winners ride, which is the opposite of what almost everyone does.
You hit the nail on the head there. It was the poverty mindset. We've talked a lot of, I think I've talked about it quite a bit about my issues with poverty mindset and scarcity mindset. Just, you're Abbotsford hood kid. I'm Victoria, BC immigrant hood kid, right? It's like the same thing.
We're very similar. Man. Yeah. Same place. Yeah.
So I get that. I got married and had children, and that, because I never spent money on myself. And that forced me to just get comfortable of just letting money fly out of my wallet, and that had no gain.
If you're wearing a 20-year-old cardigan, which looks great, I'm wearing a 20-year-old hoodie because I don't spend money on myself because I'm being programmed with poor parents and poor grandparents on both sides before them that miserly worshipped the dollar. If you fix that, you can become a hell of an investor because you already have the prudence. Now you need to eliminate the fear and the greed stuff that comes from the poverty mindset. But I'm thank God that I got married 20 years ago, so I wouldn't have a wardrobe today because she buys all my clothes, right? And every time the kids come home with a brand new jacket, they don't need a new jacket. My mom never bought me a jacket. Oh my God. And it's like, no, you buy your kids jackets. This is what you do. But we came from a place where a new jacket was a big deal. So I think that's why we're investors. I think that's why we have homes and Quest Trade accounts, because we were carved out of that value the dollar energy as a kid.
Yeah, we're one-on-one copies of each other when it comes to that. And I think we both solved that problem of selling too early with the tranches. That helps, right? Lock in how you're going to do it. I do the same thing now. It's basically I work like that now on the selling, and it more or less just solved the problem for me. But yeah, I learned it. It's not the worst lesson to learn. It's not like we're keep losing money. It was just we're selling too quick. We're not getting the gains that we could have gotten. So I think it's if you're gonna have it, better have a scarcity mindset. I think, in my opinion, than have like a crazy gambler mindset. Right? Well, that'll make you bankrupt.
Warren Buffett wouldn't even put cheese on his Egg McMuffin. You want to talk about cheese? That's not a coincidence why he ended up with the best performing fund of the last 60 years. It's not a coincidence, period.
Yeah.
So absolutely. It's a blessing. It's a little bit of a curse, but the guys out there that don't value money, every one of them, they're in leased Range Rovers with big old Rolexes and beautiful rented penthouses, and they don't have fuck all for net worth.
Yeah.
So I'd much rather be on this camp than the look at me camp that has nothing, right?
I was so out of the loop on how people leased cars. Like, especially when I met my wife,
Which you should
and
only do, by the way. I shouldn't knock it. Lease it in your
no,
company. Never buy a car again. But yes, yes.
but like I was seeing people who were 25 years old leasing $100,000 cars, and but then they were renting. And I kept wondering, I was like, and I was with my wife, we were driving. At the time, I was driving a Toyota Yaris. I met her in a Toyota Yaris hatchback, right? So it's just like, guys, you don't need a nice car to meet women.
No.
You can just
In
have a
fact,
Yaris.
you want to meet a woman in a Yaris, not in a
Yes.
Lambo, because you want to
Yeah.
meet her for the right reasons. So that's a good thing.
Yeah, she met
Same boat
me
over.
when she met me in a Yaris, and I was just a guy hustling with not a lot of money to my name. That's what I
Yeah,
was doing, and she was cool with me,
that's good, and
right?
that's a real woman. That's a life partner that grew with
Yeah,
you, that loved you for you, man. Imagine
yeah.
meeting your wife rich. That'd be scary. I
That'd be
Because
weird.
it's a fuse. It's not gonna. It's
Yeah.
I was zero, and I thank God every day that I've been able to provide that life for her, and that she hooked up with me when I was that guy, because we have something that goes so much deeper than monetary.
That is a motivator. Hey, I think about that a lot. I kind of like, because she's been with me through a health scare I had in my 20s. I had a rare disease that nearly wiped me out. It actually put me in debt, but it actually like destroyed my organs, destroyed my bones. It did the whole thing, right? And I was hospitalized for years. She was with me through that. And a large part, even when I started getting better, I was like, I'm going to just filthy rich, right? Because I just knew what it felt like if you don't have money just sitting there, you can burn through it fast.
Yeah.
I just remember thinking like, you want to give this woman everything, like almost as like a giant thank you, like you deserve the world. So a lot of times when even I didn't think I deserved it, there's been moments I'm like, well, she does. Because
Yeah.
sometimes you can be hard on yourself, where like, I don't even know if I'm a good enough person to even get what I'm getting, but I know this person is, right? And it kind of gets you to it makes you work harder. And I think having the right partner is, especially as a man, is super crucial, because if you don't have the right person in your home with you, and obviously no one gets along 24/7, we're
Yeah.
not crazy, right? But just having someone who even quietly has your back, they don't even have to say it, it means a lot. Actually, it makes it much easier to
Dude,
do things.
it's your most valuable asset is your wife, man. I hate to say
Yeah.
it, but it's like she gave you your kids. Like, there is nothing more precious. Nothing even comes remotely close to a percent of as precious as giving you your two kids. And I saw a reel on Instagram this morning, religion aside, it said something along the lines of like, if you have a good wife, God gave you one of his good daughters, or something along the lines of like, my God, man, you are lucky. If you got a good woman by your side that gave you kids, you're made. Now you just got to go out and perform, because they're the yin to
Yeah.
our yang. And
Yeah.
my wife cracked the whip and said, go in Vancouver, go do deals, go make money. I'm fine.
Yeah.
Go do your thing.
Yeah.
Without her, I hate to even admit this, I'd probably be smoking fatties on the couch, because I wouldn't have anything to kind of work towards in a
Yeah.
grand scheme of things. Not that I'd be a bum, but she certainly cracked the whip when I needed it. She was there. I had a really bad health scare as well. I'm sorry to hear you did, but we got through it, and we do own everything. And I want to leave mine a very wealthy lady. So good
I
motivation.
don't. My wife doesn't watch any of my content, but I'll send her this timestamp to be like, look at us, we're saying nice things about you. Just again, the
I
good
hope
books.
they know, man. I hope they know, because they put up
Yeah.
with a lot with us.
A
My
lot. Yeah.
wife, I don't know how she does it. She's a warrior to put up with me for 20 years. So I thank her.
It is interesting because like, you know, like we're public facing, and it's we're not. I know I'm not probably the easiest person to deal with, and a lot comes with just like like even my work schedule, running around. You're probably someone who thinks a lot as well, so there's always probably something on your
Oh,
mind. Yeah, and there's always probably something on your mind and stuff. So there's a lot that comes along with being married to people like us, who are probably all being the overachiever, while we have large goals, or always working towards something. I know for me, probably never satisfied.
I
Just
was, you know
always
what? I
going.
quickly never said. I was literally going to say my favorite thing in the world: restless, irritable, and discontent. I heard that once. I went,
Yes,
oh my God.
yes. Your wife should talk to my wife. They can
Ugh.
just they can just vent about that. Well, okay, that was great. So that was rule number 5: take profit when the trade is good. Rule number 6: I think we've talked about this, but let's just kind of briefly go over it. Never trade on tips, news, or hype. But you, like you said, you don't trade on it, but you use it as an indicator for sure, right? You're using it as an indicator when you're buying in.
Yep.
You're using it as an indicator of when to sell, like when you said the doorman, and that is how you use it. That's perfect. And we kind of covered, like, you don't use it to be like to talk you out of a trade. You just
Yeah.
use it as like a gauging of sentiment, what's happening, right?
Yeah. Everything is sponsored. So I talk about in the book, when you buy a newspaper in the media, the old legacy paper business, there's a joke called the news hole. What is the news hole? It's 6 square inches on the front page of a story surrounded by ads. when you go online and you watch a reel, your two eyeballs are one engagement that measures against 100,000 that is monetized by that reel. You are the product. So when you get an
Yeah.
email from Zero Hedge that says uranium's going to go nuts in 2026, here's why, you click it, you just paid someone, then you scroll the bottom where it says sponsored
Yeah.
content and you realize you've
Yeah.
just been advertised to.
Uh-huh.
Everything's a friggin' advertising. Every TV show in the world is a conduit. The Super Bowl is there so that companies will pay hundreds of millions of dollars at halftime. Everything is an ad. So you just be careful that you're being bombarded with promotion all the time. So if you heard about it from an article, a story, a radio, it doesn't matter. You're too late. You got to find it yourself. And then when everyone else is talking about it, it's too crowded and you should probably get out. So your trade on news tips and hypes is going to serve you very well. What did Buffett and Munger talk about? That's all they talked about, is just ignore the noise, mute the masses, stick to your guns, buy what you know, and just let time work its magic. Compounding interest is like the eighth wonder of the world. So go back and do some exercises. I'd encourage people, go on ChatGPT and go, okay, I'm 38. I'm going to put 10 grand a year into an account. I'm going to make 15% a year, and I'm going to add 10 or 15 grand every year. You're going to be retired as long as you stick to the process. Don't panic. Don't listen to people. Don't buy on tips and hype and greed and fear, and stick to let again, not timing the market, time in. That's the biggest thing.
One thing I think, and I'll just give a little PSA here, a lot of people underestimate is I've worked with hundreds of publicly traded companies
Oh
through
wow,
marketing,
yeah.
right? Hundreds. And my goal with them was to help them reach retail investors, right? Just help them through.
But you're a propagandist.
Yeah, essentially, yeah, there was,
Yeah.
I mean, that was, another lifetime ago, but it's how
Yeah.
I know so much
I
about.
know the business very well. I used to have
I
a
know
lunch.
the I know the ins and outs of what everyone's doing, so I kind of know when they're like BSing and everything.
Yeah.
And one thing, my tactic was very easy. It was just essentially, hey, you guys have a press release, we'll get it to the right people.
Mhm.
You have you want to promote your publicly traded company, we'll just target the right people who are like an oil and gas company. I'll get oil and gas people on Facebook. They can download your investor deck. Right, really simple. Add to your email list.
Yeah.
Ethical, nice, clean. You get valuable people. But a lot of the times when people would want to work with me, they'd go, hey, X and X company is they're saying for $100,000, if we pay them, they will get everyone talking about me on Reddit, on Discord, and all the forums and everything. And what those companies were doing, they were outsourcing to Thailand and other third world countries. They're
Yeah.
training teams to talk about and speak perfect English about that company and boost them in forums and everything.
Yeah.
And I would literally go, they're like, hey, can you do that for us? And I always said, I'm like, no, first off, that's super unethical. We don't, that's not how we work. And what you can do is you'll see a surge in price and a drop off in price because people are just now buying off of this list. I'm like, you're not going to make, every company wants to maintain the price. They don't want it to go up and down, right? I'm like, so you're not going to get a lift. Doing it my way is slower, but it'll work because you're actually reaching the right people. But everybody was so allured by that I know that they go like, that's great, Gary. We're not going to go, we decided not to work with you. Okay. Next thing I know, they're in Reddit forums, they have Discord channels and they're popping in. And I'm saying that is because I've had so many conversations of people who want that service. And there's companies out there that specialize specifically in only doing that one thing, which is creating actual propaganda in chat forums, in on the Reddits, in Discord channels. Like the most new, you'll see it sometimes, like the worst ones are in like my comment section. They'll be talking about like buy this Bitcoin or like 80.
Yeah.
That's the laziest way of doing it. But there's some that are so indistinguishable from real people because they've trained teams to specifically be educated on that company and talk about it in a really way you can't tell. That somebody, I've talked to people, they go, man, it was blowing up on Reddit. Oh, it was blowing up. I was reading the threads on Yahoo Finance. There's so many people talking about it, and they're convinced because they've done such a good job. That's a large part of you don't know what's real and not real. That user, because by the way, they use profiles that are years old. So when Reddit and stuff is, and they have karma points on Reddit, which means they have tens of thousands. So even Reddit can't tell their bot accounts.
That's how it's working now. They're using layers. It's like the mafia kills a guy, but it's 10 degrees of separation from the boss. So he's arguably not guilty, and they'll hijack old Reddit accounts. And when you comp one of these PR companies, how they then distribute is very vague in terms of the disclosure rules. So I would please caution you, or I'd never give advice, but my honest advice to you, because I know a handful of guys that have beautiful lives. What they did is they had YouTube accounts blow up. They said no to all the $25,000 whore type alienate my base early stuff. They got massive, and then they could say yes to $1 or $2 million contracts on companies they love and be a part of that. Actually, be like, full disclosure, they gave me $1 million and I'm actually an owner, and that's why I said yes to them. So,
Yeah.
so don't turn it into a commercial, because that's what so many people do. And you can make a really good living doing it. But I would caution, there's a few guys, like I'll tell you offline, some US companies that basically can command $5 million marketing budgets and only do one a quarter. And it's just two guys in Houston living large, doing it the real way, because they actually reached this critical mass. But no, it's the tweet to the doorman is the tip I'm referring to, where he says, "Oh, I hear that such and such uranium." So he's been promoted to through some Vancouver company. And I also want to warn people that Apple, let's just take the top of the food chain, they market. Apple spends many, many hundreds of millions of years making sure that you know about the 17 Pro. So they're marketing a percent of their top line revenue, right? Then in Vancouver, you have promotional penny stocks that are spending 99% of their budget on marketing. So in other words, they're 1% meat on the bone, 99% bullshit. Apple's 99% meat on the bone, spending 1% of their budget to make sure you know them. We're probably more like 5 or 6. But the point being is that really, especially going down in the microcap realm, is this a promote? Is this a real company that doesn't promote? Or is it somewhere in the middle, which, Robert Friedland put it perfectly, which is, if you raise $1 million in a spec business, a venture capital business, yes, you should spend 100 grand. You should spend 10% telling people, because marketing is critical. It's important. We all have to do it. But the companies that spend 80%, those are promotes. That's what give the market a bad name. That's what gives Vancouver a bad name globally. You can go to Switzerland and they'll go, "Oh, God, you're from Vancouver," and they literally grab their wallet. So yeah, marketing is required, but it's a very murky game. And I always tell people, dude, and this surprises a lot of people. When you go on CNBC in the morning and you hear Jim Cramer telling you what a buy Palantir is, and it's been beat up because of this and this and that, that's sponsored content. I know people don't even want to believe
That's
that.
all of it is. Yep.
It's sponsored freaking content. They don't do it for free. It's owned by Comcast. Comcast is owned by Vanguard and BlackRock. They're all in cahoots, and they all have budgeting or marketing dollars budgeted. You are the product. If you're being told to buy Nvidia at 9:30 on CNBC, it's paid for. It's sponsored. So
You got to be so weary of that. I'm going to give away more marketing hacks right now too. So if you made it this far in the podcast, I'm just going to stop people from getting manipulated, because I don't really work in advertising capital markets anymore. I do advertising across the board for just basically everybody at this point. And I'll just talk about the things that bother me. And it's okay if I piss people off. This is going to piss off some influencers and probably some large banks. So,
well, you haven't sold your soul, which is beautiful. When you're,
I don't need to. I have no reason to.
Transparency only comes from people that haven't sold their soul. That's what I love about your podcast.
I would tell funds and companies and stuff. I go, like, you have to be transparent and tell people exactly what you're doing. It might hurt you in the short term, but in the long term, it'll be benefits, and nobody wants to take on that pain, right? So the reason why I only talk about certain funds, good and bad, or the things that I own, I'm like, oh, I own it for this reason. That's the end, right? And if I want to be sponsored by them, it's just because I'm like, I own you or something. But I have no I don't make enough money off anybody for it to influence my decision making, because I just make so much more doing my other stuff, my advertising. I don't need anybody. I need nobody to make this channel run, which is very much freeing. So I only work with people that I like working with, whether it's a sponsor and stuff. I just don't need them.
That should be your golden rule. Unless you'd hang out.
It's unless I'm using you, unless I think you actually have value, I don't really want you to come on as a sponsor or do anything. That's a simple rule. And then I don't have to go outside of that. But what I'll notice is a lot of influencers in the space, and I'm not going to say any names, you'll see, let's say, a video they did about BMO. Right? Yeah. And you're like, it got 500,000 views, 400,000. Just so you know, what they're doing is they're driving paid traffic to their organic video to make it look more popular, to convince you that it's better. Then you'll see a video, and there's a couple indicators. And this is going to give people the tip. If you see a video and it has 100,000 views with a bank or a CEO and something, but it's got 10 likes and one comment, something's wrong. Look at the engagement on a video and look at how many likes it has and how many comments. Then go through the comments. Are the comments spam of nice video, fantastic, great advice? Is it hyper generic?
Yeah.
So what's happening and what people do in the influencer space, because they're so desperate for sponsors, is they will take a video. Like I had my tax video. It did 10,000 views.
Yeah.
Right. But it didn't do 300,000. What people do is they'll take a video, they'll pump it to 300,000 with paid. Let it get some good comments, some good views. Where it'll get 5,000, so it looks like, oh, I got 100 likes, some good comments. So now it looks natural. They'll flood it with paid ads. Now it got 100 something thousand. They'll go to the BMO, being like, man, we get a lot of people. BMO go like, okay, great, let's go work with you. They'll take the BMO video, it'll get 2,000 views. They'll flood it with 100,000 ads, and they're trying to blend it to make it look like something it's not. There is so much manipulation. So when I made the channel, I said, you know what, if something gets 10 views, or if it gets me and Adriano 75,000 views for a podcast, it's sweet, organic, real.
Organic.
I got that good stuff, right?
Unicorn.
Like if we're drug dealers,
Man,
I got the good
organic viral video is, you should have a trophy for that. So I want to really stress when people go tonight, because you're so right, man. When people go tonight and they're bored, they hop on YouTube, and the first thing that pops up, it says, why Tesla needs nickel, and 300,000 views in 2 days. Weird. Click it. 14 minutes later. And this video was brought to you by Vancouver Penny Stock Nickel Company. Disclaimer in the description below, whatever. It's never real. It's never organic. It's never real. And they ticker tag the big box names to expose you to their freaking bullshit that they're trying to market to you. So yeah,
my eye is so dialed in. I've been doing it for so long, and I understand how it works so well. I can just go through a social media feed of all the influencers in Canada, in North America, all the large like funds, and I can go bullshit, real, bullshit, real. And it is a blend when you get over the 100,000 mark of views, no matter who it is a blend of bullshit and real, bullshit and real, right? And I can just tell by looking at it instantaneously. Even sometimes when it's unsponsored, they will use posts to attract sponsors. So they'll push a post or authentically use it as a media kit piece and sell it to sponsors. Sponsors are really smart now. So like even larger funds are pretty smart to be like, they have good marketing teams who be like, no, send me your analytics. Yeah. How much will this come? They'll do that now, but they weren't doing that a year ago or 2 years ago.
When a Vancouver company, like when a Vancouver company earmarks $100,000 budget and he gives it to some guy in Burnaby that's got a marketing company, all he does, he dices up $2,500 tranches and gives it to Instagram influencers that go out and do, and here's the top 3 uranium stocks you need. And it'll say Cameco, Denison, and then it'll give you a 5-center. You know exactly what they're doing. And it's very clever and it's very deceptive. And I thank God you're telling people, because more people need to be aware. And if you're in marketing,
I think from my perspective is, will it hurt my income for the channel? In the short term, yes. Well, I just said BMO. They probably don't like me now, right? Like, because they have people, they watch the content. I know because I talk.
So that's okay. They're evil.
But I talk to them. I know they watch the stuff. So I know if I say something like this, that's outing something that I know is happening, they're gonna be like, screw this guy, right? So that's, you're talking hundreds of thousands just off the table. But at the same time, I'm like, I don't really care. There's still enough people that I like in this space that I want to work with. So like, I'm fine. And in the long term, it's great. I always want to be associated with stuff where I go like, yeah, I think this is it. Or if it's an index fund or an ETF, this is what I want to work with. Great. Let's just stick with this.
Well, you know, like you're forever, like nobody in your position. It happens all the time, man. You don't want to be Jarul pumping Firefest.
Yes.
You want to be 50 Cent pumping vitamin water before Coke buys it. That's what I mean. Be so selective and wait till you are like, I want to partner with this company. I want to partner with this organization. Believe in it. And then
partners. That's the word we actually use. Yeah.
Yeah. And then make it huge budget and go, I'm very selective. I only, have one sponsored content a quarter or whatever it may be. And it's going to be you. So I need the budget to match that. Right.
But that also brings us back to financial freedom. I can be like this. Like, I don't know how would I behave if it was 10 years ago, I didn't have kids, right? Or 15 years ago. I have financial freedom where I can just go off of my code of ethics and work off of that. And whatever, I don't want to work with you. Like, just say no to people just because like this is sketchy. At the same time, there is a very real feeling when I talk online, like your Substack, I have a feeling you're going to pop online at some point because you should. Like, you should start get something going, right? Yeah. So like,
you're going to hide. I straddle The stealth is wealth versus like wanting to go out and help people, and it's something I struggle with
Just be
mentally.
careful. I'm trying to find a balance of it as well. It's like you'll find a balance. I'm still working through it as well. But I have a feeling you'll have a successful YouTube channel as well. But there's a very real thing of I have young kids and they watch, and this stuff stays online forever. And I
Yeah,
don't. And if I'm trying to lead by example, if my daughter and my son go, Dad did some weird stuff, it's gonna. I don't have to say anything to them. It's gonna affect their behavior, and they'll start acting like scumbags as well. So like I have to lead as so when I do the channel, I'm a father and
yeah,
husband first, then I'm an educator second,
yeah,
right? And then third, I'm a businessman. It's like, okay, well, how can we monetize the channels? Because I have editors and stuff. How can we pay them and keep
yeah.
everything flowing? Then you kind of think those are the three tiers of content creation. And I think that's a pretty good place to lead from and start with. And then we kind of, whatever happens, happens, right?
Totally. No, yeah. I always tell myself since I was a kid, be able to defend everything you do and say always. I'm actually very proud that in being in business for 20 years, you won't find anyone that be able to say something negative because I've worked extremely hard to have that where nobody could say anything negative. And every trade you make, every client you take, and every video you make is time stamped into eternity. So be picky. This life, this canvas, this big blank
Yeah.
canvas we're painting every day, and it's a journey, but everything is time stamped. And I even, as funny as it sounds, I got like a full-time bookkeeper and a full-time accountant that gets all my trades at the end of the year. And I work with in other businesses. When I'm making a trade, my bookkeeper, Seema, is going to literally be like, what's he thinking? And I'm literally in her mind, be like, I don't want her thinking I'm a manic in and out of this or buying dumb this or following some hype promotion. Like I
Yeah.
have eyes on everything I do, and my kids are going to have my portfolio, and it's all time stamped forever. So always act as if there's an audience for sure. And just, yeah, make good decisions that you know are there in the history books forever. It's a good way to live.
All right. Now let's move on to this is a good one. Rule number 7, be emotionless. Talk about
Well,
that. That I
I've
learned the
talked
hard
about,
way. I feel like
yeah, I've talked about fear and greed. So if you got that green position in your quest trade, it's up 14 grand. It's only been 2 weeks. You chop it, you're chopping it out of greed. And if you have it the opposite and that position's 14 grand in the red, and you're like, I'm going to hold on to it, even though it doesn't make any sense anymore. You're holding on to it out of fear that you don't want to lose money. So be a bank, man. The best advice I was ever given from an old guy was make moves like an institution would. Well, what do institutions do? They don't buy penny stocks. I'll tell you that. In fact, they don't even buy illiquid stocks. So I had another friend years ago. He goes, my new strategy is I'm only buying institutional grade stocks. Well, what does that mean? If it doesn't trade 100 million a day in volume, I ain't touching it. Well,
yeah.
there's lots of little friction point safeguards. So maybe don't trade during the day. Sounds totally nuts to a lot of new investors. Believe me, it's a very real thing. Putting your orders after hours, setting your limits, your bracket of what you're willing to pay or not. You can have all or nothing orders. You can have iceberg orders that will not show, and you can do everything you want to do. But for my God, man, don't be a gambler. Don't be the guy at the horse races with his last 20 bucks with a beer in one hand and an empty wallet, acting like a manic gambler, because that is the AMC, GameStop, NFT shitcoin world. It's mania. It's fueled on FOMO, greed, YOLO bullshit that never, ever ends well. And any fool can get lucky, of course. Anyone can hit a big win and make $1 million. But believe me, hanging on to that million and let alone turning into 2 or 3 or 10 is a lot
Yeah.
harder than getting lucky, right? So you have to make business decisions. That's the easiest way I would put it is I treat my portfolio like I would treat a very small merchant bank. And if this was a family office or if this was a public company and it's audited, I need to be able to stand by my moves. And I'm not going to sell a stock on Monday because I'm didn't like the tea that day and I'm hungover. It's raining out. None of that shit. You got to be emotionless in this game. Plain and simple. Be surgical. Don't go to work in a bad mood. Don't open your portfolio if you're feeling too caffeinated. Protect yourself, right?
That's great. And that basically summarizes the rules 1 to 7 of the trade. These are great rules. I think I do
And they're not unique.
basically
They've been out for thousands of years.
yeah.
I just put them into a chapter to go, hey guys, again, made $1 million here because I did this, lost a
Yeah.
million here because I did this. This rule would have prevented the loss and it would have doubled the gain. So sorry to
I,
interrupt
w-
you.
I want to go through a couple notes. I have some notes here. There's, and these are just sort of general investing tips. And I like this one. It's build a 12 to 24 month runway for true independence. I know I always say, when you're starting, just aim for 6 months if you got nothing. It's
Yeah.
like pay down debt, get all that high interest debt off the table while paying off, while building a runway of 6 months. I have a video coming out in a few weeks where essentially I say, and I just want to hear your thoughts on this, is I say, pay off the debt, but don't put all of it on your high interest debt. Start putting like 15% or more into an emergency fund. So build an emergency fund alongside debt, because what happens is if something happens again, you fall into more debt to cover it. So you need some of them. You need to start building a bit of a moat while you're paying down debt. So if something happens, you can draw from the moat. Talk me through what your strategy is, because I used this when I was really sick, and when I got into debt, it's how I got myself out really, really fast. Was basically just work a lot and then just get rid of it as fast as humanly possible. But talk about your, how you landed on 12 to 24 month runway and, that process.
Yeah, well, I started in tech, right, as a young kid, very young. I've had a lot of shitty jobs at a very young age. I did all the trades, literally. I worked for so many shitty bosses at outside sales, miserable jobs. So what I realized pretty early, thank God, again, and I am a reader, so I'm a bookworm. I read a lot of the old books. They all say the same thing, and that is that cash is choices. Cash buys you optionality. If you have a simple life and you need 100 grand a year to cover all your expenses, and you're able to stuff away 100 grand in cash, can be invested, of course, but you got 100 grand of runway, you've bought a year. You can go travel, you can pick up art, you can start making music, you can just live your life, or you can go start a business, or you can learn to be a coach, or you can spend the year in the gym. 100 grand, if it costs you 100 to live, bought you a year of your life. So stop seeing that scarcity we talked about and start seeing the opportunity. So if you say, you know what, I'm miserable, I hate my job, I hate my life, you're only making 60 grand a year in some outside sales job, or you're delivering Uber, whatever you're doing, and you can get to a place where you can stuff away that 60K, which is your total expenses last year, you've literally bought yourself 12-month runway. Now you can go out carefree, guilt-free, more importantly, not carefree. We'll have to be worried about things, but you've bought yourself a year of your life, right? So it's super underrated with respect to the fact that money is choices. When people go, I'm sitting on too much cash, I'm going to invest it. Okay, nice. Then what? Then you don't have any more choices. You've killed your optionality. So cash is a position, cash is choices. When you've deployed the cash, you do lose that optionality. So it's a fine line by not hoarding cash and losing out because of inflation and all of these matters. You can fix a life you're not happy with 1 or 2 years runway by way of pivoting hard and just turning off your social media, stop answering your phone, stop asking other people for their opinion, start reading, start writing, start investing, and you'd be amazed. You'd be amazed. So it's like anyone out there is a day away from pivoting their entire life by simply smartly creating a runway. And then like an airplane, you have enough leeway to get airborne, right? So that's really what that means.
Yeah, it kind of led me to, I don't underestimate anybody anymore, because like when you talk about, like when I started building wealth, it was coming off of the health issue, 40K in debt. Only half my body worked, even my left arm didn't work. And within a year, I was doing, my body was still broken, but financially I was doing great, and mentally I was fine. And it was just in that year, if someone had seen me before, and after a year, you'd be like, what the hell? It's like two universes.
Yeah.
And it sort of taught me, when I look at anybody in any situation, regardless of how low they're feeling, I go, that doesn't mean anything.
Yeah.
You can just, you said it best, like shut off social media, hyper focus for a year, and the year goes back by very fast. You
Yeah.
can be completely different human being in a completely different circumstance, regardless of your starting point. Because I know personally, I was in probably as close as it gets to worst case,
Yeah.
and I ended up in my version of a happy life. I ended up in my version of a happy life. Everyone has a different one. So
Yeah.
like anytime I look at anybody, I go, potential, 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 potential. If they're not happy, they're miserable, I go,
Yeah.
potential. Because it's not even, you're your own worst enemy in almost most
Yeah.
cases, even with debt. Like I'm drowning in debt. You follow your rule, pay it down, get it all done, create that runway, do all that boring work that you have to do. You're good. And go figure out what you like and go live.
When you pull the shoot on your what you consider a mediocre life, my friends are all potheads, nobody's doing it, everybody hates Canada.
Yeah.
Well, when you disappear for 6 months and you change your frequency and you
Yeah.
reemerge as a new you,
Yeah.
leaner, physically leaner,
Yeah.
smarter, sharper, with brighter eyes, you're going to attract people on that same frequency, and you're going to have more
Yeah.
opportunities. You're going to be shocked at how the universe then starts to, like, you've now put up your antenna at different frequency, and you will attract life partners, whether it's relationships, looking for a partner there, looking for business opportunities, looking for just people to advance you. Like men, especially men, like iron sharpens iron. And if you are feeling low, look at your buddies. I hate to say it to a lot of guys, but it's like you are the sum total of the 10 guys you spend the most time with. And in fact, you earn the average income of the 5 guys you spend the most time talking to. And that's very real. And people guard their time for a reason and are very selective. But energy and frequency, people, please no, you can vanish for 6 months, you can vanish for a month, and you can come back a new man with a positive
Yeah.
mental attitude and a hungry, abundant mindset from a scared, sheltered poverty mindset, and you can be a different person in a different world, and you'd be amazed how quick. And I've had that iteration of my life many times over. I've had a few really bad, like, bike accidents, motorbike crashes, where I went dark and I questioned my existence and what am I doing? What am I going to be when I grow up at 35 years old, practically? And it's like, we all get there, but we've allowed the dark thoughts to become heavy, and we often need a reset to go out. And vices is the big, the big differentiator. Is it's typically people that drink, typically they smoke pot, typically it's porn, typically it's bad food. They
Yeah.
complain about their finances, they complain about their spouse.
Yeah.
No shit, your life sucks, buddy. Take a look around, right? And you can
Yeah.
change
Yeah.
every one of those things overnight. So,
All of those are controllable. I think
yeah,
one thing I'm trying to think that might have hindered my success in the past, especially when I was younger, and even starting, I think definitely for starting a business, I
yeah,
always thought when people started a business, there's something inherently special about them. They were
yeah,
smarter, they had access to resources I didn't do, they were just better in some way. They could do it, but I couldn't because I wasn't
yeah,
whatever they were. And I learned, and this all came through that life-changing experience, that like I'm honest with myself. There's nothing inherently special about me. I don't feel smarter than anyone who comes on as a guest. I don't feel smarter than any viewer.
yeah,
I don't feel more athletic than anybody. Or I can't. I always felt like if you looked up average or maybe even below average slightly, you would see like a photo of me, right? It'd be like giving a thumbs up and happy about it. Like I'm okay. Like I've
that
never,
would
swear
be
to God,
great. Yeah,
but I've
that's the shadow self saying that.
But I've never felt it though. I guess I've never felt it though. I've always just felt like, okay, there's just a lot of stuff. I'm always feeling like I need to learn stuff, and there's just so much there. But I realize I'm like, if I'm like this, that's more than enough to
Yeah,
do whatever I want in life. I'm like, that is actually the requirement of like, are you just someone who's curious, and if you want to do it enough, you'll do it. And then as I got more successful and as I met business owners, as I started talking to CEOs, I went, wait a second, you're just as dumb as me. And then I realized everybody, I'm talking about billionaires I've met,
yeah,
people like in the hundreds,
yeah,
people are so much, I go, you're like equally as dumb as I am. I'm like, wait a second. I thought I'll just by myself, just a lone idiot surrounded by all these. I'm like, oh, you're all stupid. Everyone's dumb. I'm dumb. We're all just trying our best. We all realize into the secret that we're
yeah,
all just kind of using the information we have as best as we can, but we really don't know everything. And we're just trying to make the best educated guess in that moment. And
yeah,
what we're really good at is executing quickly, which means we'll try something, go, oh, that didn't work, immediately iterate and improve or pivot to something else. And we do it really fast while other people are locked in this constant state of analysis by paralysis of like, ugh, spend a year planning for this, and then they do it, it doesn't work, and then they get discouraged. Where I just think, do, didn't work, move, think, do, didn't work. Oh, it kind of worked. It approved, go, go, go. So I did 18 steps in
mhm,
one afternoon, and it took you 5 years to do those same 18. I'm like, and that was the one consistent I saw with people who were successful, not that they could just
yeah,
do that and not get discouraged by failure and didn't even care about dopamine. Dopamine
yeah,
doesn't exist. It's just like delayed gratification. Like none of that was intellectual though. None of that was you had a thing. It's like, oh, you're just good at stuff. You're just good at not getting satisfied right away, and you're just good at trying things and not caring what people think. Oh, I was always very good at not caring what people think. So
yeah,
that that was like, okay, that's all it is. That's the
mm,
key to making working a 9 to 5, making whatever you're making, 40, 50, 60, 70, 80, 90, $100,000 a year, to then being like, oh, I don't even think about money anymore. It's just like a number. Like, the last time it's just digits in my bank account that I fluctuate. Like, there's no emotional attachment there anymore. It's zero. It's just like I can make it go higher or lower. And that's what it
Totally.
is. Like, you've removed all, and that's when you're like, okay, I'm at a different level now. But
Yeah.
what do you think about that? Because that's kind of what I came into, the aha moment of like, we're all just, the successful ones are all this, we're all this kind of like, that's what we all have in common, more or less.
We do. Well, so I would say, like, what comes to mind for me is like Jeff Bezos is not special.
Yeah.
He's a simple man. But what he is he's hyper disciplined. He's hyper aware. He is hypercritical. He suffers like all successful people with the
Yeah.
called like the inferiority complex. I mean, most billionaires, ironically, I think you're a tall guy, most billionaires on earth, funny story, are short. They have that
Yeah.
little man syndrome. They overcompensate. I happen to work with a few guys. I'll give an example of my personal life as I can give firsthand experience. I have 3 different business partners who I talk to on a daily basis that are wealthy men. They're quarter billion, 200, $300 million net worth guys. Not only are they amongst the most dissatisfied people I know, which I say importantly because everyone on earth goes, if I just had 500 grand in the bank, if I just had $1 million in the bank, fuck off. I promise you,
Yeah. I know.
that is not the ingredient for happiness. What they are is they're hyper disciplined. All 3 of them don't drink. All 3 of them protect their peace. All 3 of them don't care what other people think. All 3 of them are hyper resilient in terms of correcting path in real time. I fucked up. That's okay. Correct
Yeah.
path. And, they're deeply dissatisfied with themselves. So
Yes.
their hyperdrive for not enoughness, the not getting patted on the head as a little boy, made them worth $300 million because they can't stop, won't stop. But success in a traditional Steve Jobs sense, and all of these guys, they're disciplined, man. They're
Yeah.
disciplined and they're aware and they're resilient, and they don't become overcome by things, and they seek out guidance. I think mentorship's probably the most underrated thing on the fucking planet. Right now I have 2 coaches, one for physical in the gym. I've got a regular like mental coach I work with on a weekly basis. I've got tons of mentors. I've got a stack of 15 books beside me on the go. I have a stack of books beside my bed on the go. I have 200 Audible in my phone every time I drive, 200 different books at various stages I reread. And I have to. And it's so important to just constantly bring yourself back to the positive. Funny story. I was trying to Eckhart Tolle in Pacific Center in Vancouver, which is like the biggest moment.
Yeah.
I've never been starstruck in my life. And then I look over, I go, Mr. Tolle. He goes, hello. I'm shocked anyone recognized me. And
You you just bumped into him at the
I just
Pacific
bumped into
Center?
him. It's on my
That is
Instagram.
wild.
Got an amazing photo. We chatted for 20 minutes. I told him I've given Power of Now to 100 people. And I
Yeah.
was just like, dude, I read that book every year. And I read that book because sorry to even bring that up, but I come
Yeah.
back to the fact that like all we have is this day, period, end of story. And all of your freaking anxiety and panic and worry and cold sweats come from your concern of the future, and all of your trauma and worry and depression of what you've done, your shame and your guilt comes from fixation on the past. And there's a reason your windshield's that big and your rearview mirror is that big. You got to go forward. And the Elon Musks of the world, they charge through. He goes in the office every day. And there's that great saying with Steve Jobs too, which was something along the lines of like all signal, no noise. So it's like, everybody stop.
Boom.
What's the biggest problem today? Well, sir, a rocket fell off on such and such. Okay, well, let's go. All signal, go, go, go. Just swimming through the nonsensical stuff, which is the difference between people. Oh, I can't. Starting a business is hard. Taxes in Canada are crazy. That sector's over. AI is going to ruin that. Okay, fine. Don't be successful. You've convinced yourself you won't. You can't fix that. They have to fundamentally change their mindset. And yeah, Jeff Bezos is not special. That's my that's my long answer.
Nobody is.
No, none of like guys. I know good friends that were just on Necker Island with Mr. Virgin, Bronson. He's a normal, insecure dude hoping to get friends come visit him because
Yeah.
he's got hundreds of thousands of employees, right? These people aren't special. They're focused and they're disciplined, and they protect their peace.
One thing that really clicked in my head, and this was years ago it was that when you said separate signal from noise, I guess I must have got it from Steve Jobs. I remember reading it somewhere or watching a video about it, and it clicked and become like, that's what I had been doing. That was the secret. That was how I how I work is separating signal. It's just so like a laser beam and like
Yeah.
nothing gets into it, right? And
Yeah.
the amount of stuff, it's like someone works an 8 hour day and they're doing signal and noise, nothing gets done. You
Yeah.
separate signal from noise and you do an 8 hour day, you just pumped out so much stuff. It is wild how much you can get done if you just boom, do the damn thing.
If
It is
you're
crazy.
the book, probably my favorite book of all time is The Power of Positive Thinking, Norman Vincent Peale. It's a 100-year-old book. And all he stresses over and over this book, he calls it your chief definite aim. It's the reason for Carnegie and Henry Ford and all these like mega industrialists. They were all students of this one guy. And he gives the example, not exactly, but his example is along the lines, if you're a Marine hoofing it through the mud and you've got to get from point A to point B today, you care not that your socks are wet or that you dropped your water bottle or that your
Yeah.
friend is chewing bubble gum and it's bugging you. You have to get to B from A. That's it. That's it. That's
Yeah.
the day. And if you do that every day, you make 1% gain every day, you're going to stack wins. You're going to have a great week. You're going to have a great quarter. You're going to have a good year. And before you know it, you're in the money and you're feeling abundant. But yeah, it's about small wins. It's about acknowledging the forward momentum you are making. And my God, man, drop the dumb shit. Like a simple thing I even thought about, like cannabis is one thing. It's like, well, if I were to use something that would make me eat shitty, not want to go to the gym, not want to go on my walk, talk rude to my wife and not do my work. Oh, well, yeah, let's do that today. Sounds like a great idea. So it's like, get to the root cause of your weakness. Doesn't have to be pot. Maybe it's literally going on Twitter too early in the morning, but we all have our vices that we need to hack with a big machete.
Yeah.
And have a chief definite aim, because the unhappy people, there's a wonderful saying I heard recently, because I do believe passive aggression is a problem with Canadian men. And the saying was,
Yeah.
it truly is. It's a disease. It's a
Yeah.
Canadian
I agree.
disease. And the saying was, you'll never meet a man that questions his purpose, that's constantly in service of other men. So you're unhappy, you call the friend that's in the slumps, you walk them through, your problems become a void during that call. And then when you're done the call, you've not only elevated your fellow man or woman, you've just showered off your problems of the day, because they don't even seem like problems anymore. So be of service to the world around you. And again, like the world gives to givers, it takes from takers, right? That's a very clear thing when it comes to monetary gain. If you're a net giver with charity, with your kids, with your neighbors, with your business, with your employees, you treat people good, that money is just going to come right back to you. That's just the laws of nature.
That's so true. I want to learn more about you before we wrap up here, because you're a really interesting guy. I we chatted a little bit via email back and forth, especially like over the winter. I read the book. How did everything happen? Like, tell us, because you talk about it in the book, but how you got from where you started to sort of the series of events and changes that happened to get you to even write the book. Like, how did the book happen? What led you to make it?
Yeah, the book was, ironically, I live in the stock market. The book was to expose the stock market. The book was to be a guide, an easy, digestible 200-page read for a total newbie to recognize that it's a giant casino in the sky and you can be a participant, but it's there to take you. So if you want, I can give you the story quick. It's a weird one.
Yep.
Because I am an outsider. I really pride myself on that fact that first and foremost, I was never a stockbroker. I was never in the business. No one in my family was in and around investments at all. I was never given a penny of inheritance. I was never given any real leg up in this world. I really had to crawl and scratch for it. So grew up in Abbey, a literal street kid, 14 years old on the streets, two bad parents. Dad died when I was really young, fell in with just
Damn.
the worst time and place to be a kid in Abbotsford was the late 90s. Literally all of my peers died in the late
Yeah.
90s, early 2000s. It was the opiate crisis, and then everybody was about it, and selling cocaine and carrying handguns. Like, we're talking kids at Yale Secondary in 1999 were
Yeah.
thuggish. They thought they were, and so I remember saying to them all, like, guys, I've watched Goodfellas, I watched Scarface. Like, what do you think is going to happen here? So I was always very turned off by this sort of thuggish BC culture as a youngster. Was ran by bikers and all these different gangs. And that was really, if you weren't, in the working world or going off university, that was all too common in BC. So I didn't like it. I turned 18, drinking age. I moved to Alberta, took a chance, never got to finish high school. I'm very shy. For years, I was ashamed to death that I'm a literal high school dropout, very early in high school, like about a month or so into my grade 8. So I'm a
Wow.
literal definition of my likelihood of success is nil. So to all of you that say I don't have a education or diploma, get that out of your head right now. Turned 18, moved to Calgary with nothing. I bumped into an old friend who had already moved there. He said, "Hey, Suncor's hiring IT tech guys." It was a phenomenal, like in hindsight, that too was saved my life. So I ended up from a street kid in Abbotsford to an executive doing basically tech support, like a help desk for the oil patch when I was 18, in a suit, making huge hourly wage, watching all these oil bros walk up and down the hallway with Rolexes going down to 911s, talking about futures and options contracts and Suncor stock. I'm going, what is this world? I've never heard of any of this. So I immersed myself immediately into the stock market. By 19, I had an Interactive Brokers account. I was literally day trading like short-term options. Back then there were no dailies, it was weeklies. I
Yeah.
was trading futures before I even knew what equities were, blowing my
Wow.
brains out. Very long story short there is I just kept putting money into an Interactive Brokers account, literally like a pensioner feeding a slot machine, and just lose, lose, lose. And then I kind of stopped around 20 and met my wife and said, okay, I want to take this thing seriously. Really dug into the books, fell in love with gold, started speculating really, really young on gold explore codes, the Vancouver shit codes that you're probably familiar with.
Hmm.
Was on the golf course one day, 21 years old, and this guy who I get paired up with hands me his card and it says Kestrel Gold. And I goes KGC.V. And I go, "You have a public company?" I'm this little kid. And he goes, "Well, yeah, no, it's nothing to do to." I go, "You have a stock? Like it's your company?" So I was a tech nerd. I built him a $5,000 WordPress website. I became valuable to him. He brought me under his wing. I then started speculating quite seriously in gold juniors,
Mm.
one of which, funny enough, at the time, I was a ferocious pothead. I was I had a website called cannabishealth.com. It was the world's first online resource, and I was a gold bug. So in 2008, 2009, 2010, I owned a company called Supreme Resources, a little Chilliwack-based gold company. And they all of a sudden one day put out a press release, "We're getting in the marijuana business." So I literally went down to the bottom to the IR line, called them up, said, "Hey guys, you don't know me. I'm out in the valley. I know everyone in weed in the world, and I'm a shareholder. Can we chat?" And so I literally got in my car, went downtown Van, keg on Granville, Dunsmuir. I'll never forget. I meet this incredibly outgoing stock promoter who had just sold the Vancouver Whitecaps and TSN 1040 radio. He gave me $1 million check, put me on a plane to Toronto. Never been to Toronto. Ended up buying Supreme, what's called AmCan, a guy named John Fowler, later Nav Dollywall. They ended up selling that to Canopy Growth for like 350 million bucks. So I helped kind of piece together Supreme, which was the first real big Canadian legitimate ACM PR. Back then it was medical. Built it, raised them a bunch of money, gave them all their exposure because I was already kind of talking on the internet about the space. That morphed into Aurora, where I actually did the first big fundraiser for Aurora at a quarter. Couldn't give away stock back then, the first
Yeah.
few months of 2014. Realized that Canada was now in a cannabis bubble. So I got convinced to go down to California, help a gentleman out with a company called Origin House. Origin House ended up being bought by Cresco Labs for a little over $1 billion. At this point, Aurora was like a $2 billion market cap, total unicorn. Millions of valuable lessons all through that. I won't even bore your audience with today. That led me into the psychedelic realm, where I started one of Canada's first big, or was a part of investor wise, of a first big psychedelic company that did very, very well. And then full circle now back to just a boring, so the point being is I'm a retail investor. That's what I'm trying to say is I'm a nobody retail investor that by the grace of God, I had these like lily pads of like meet Kevin and Kestrel, meet Dave and Supreme, meet Terry Booth and Aurora, meet Mark and Origin House, meet all of these different people. I've been all over the planet, sat down with billionaires, done some amazing things. And now I am just a boring dad of 3 teenagers out in the valley, up in the interior as well. And I do have a public company myself. It's just a small portfolio. Basically, it's about $3.5 million of NAV. It's basically Bitcoin, gold, and cash, because that's kind of the only 3 places right now as far as where
Yeah.
I feel really safe as far as investor fiduciary duty, let's call it.
Yeah.
So that takes a heck of a lot of my time. And to be totally honest, I give a lot of my day to young people and old that want to learn to trade as, again, I would say a financially beneficial hobby, not a business, because again, you got to allow the universe to let you in that way because it's a tricky business. But the book came out of being ripped off by about 500 charlatans in the space, being naive, being kind-hearted, being generous, and realizing that the inner workings of the stock market, whether it's a 5 cent Vancouver promote or a $2,000 a share NASDAQ Wall Street darling, it's the same. It's a lot of smoke and mirrors, and there's a lot of great businesses out there, of course, but people have to be very, very careful, and they got to know what's behind the curtain. So the book was me journaling for more than a decade. I then sought out a great mentorship with a guy named Jamie Wheel and Ryan Holiday. They both helped me. I hired them, paid them a ton of money. Said I got this massive 30,000 word manuscript. It's kind of like an autobiography of me breaking into the stock market, becoming this cannabis expert and psychedelics. And then I had the first listed blockchain, it was called 360 Blockchain. It's still around, sticker code. I had the very first trading blockchain company in Canada, ironically, which is so funny to even think about. And I said, I want to help people. I want to warn people. And so they helped me a lot. They're both New York bestselling author many times over. And then finally, I met another gentleman who's a very expensive but very phenomenal editor. And he took what I had built from their help and spent 2 years with this editor and actually whittled down. It's almost like a Scorsese movie that's like 6 hours. Like, hey, we got to
You
commercialize.
refined it.
Come on. So I spent 2 hours dicing the book, taking more than half of it out, going, I want this to be a really poignant, boom, 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 no fluff, no personal stuff. I do give personal examples to help people, but the bottom line is I had no help, no guidance. I sought it out. I sought it through books. I sought it through YouTube, was my single source of trajectory. I got lucky because I put myself out there. I was extremely hungry in the areas that I was interested in. And I was always willing to cut a check and buy myself a seat at the table. So I never once had my hand, I didn't invoice any clients. I said, hey, I want to cut a check. I want to be a part of this. And then by osmosis, they ended up saying, well, how do we engage you? How do you work with us? And so I came into all of these opportunities incredibly organically, and then sort of almost spit myself back out going like, yuck, this is it never really felt authentic. The markets to me have always felt like just too many people that were bankers. Let's just put it that way. I'll leave it at that. It's a business of people that are former investment bankers, and I was never a banker. So I never got anything for free. I never got commission in life. They lived off clipping fees, and my money was always my money. I never had clients. So now I write on Substack. I help people. I give away the book. I help people on WhatsApp. I'm pretty active on Twitter. And then I have my little day job, and I do hope, I'm reluctant to say this out loud, but I have studied Berkshire Hathaway. The origin story of Berkshire Hathaway is a beautiful story, like how he actually got the shell, didn't want it, got it out of spite. I did the same thing 7 years ago with an old Vancouver deal maker, Doug Mason. I ended up buying 10% of a little company called Waterfront Capital, been around for like 40 years plus. And anyway, I ended up kind of taking the vessel, and that vessel today is digital commodities, which is my sort of day job, as it were. But it's my 0 point to try to build the 30-year runway, a 40-year Berkshire Hathaway. I've got a phenomenal business partner. I've got investment from a NASDAQ company called Mogo. They just changed their name to Orion. It trades in Canada, the US. So I have a real opportunity to do it right. And when I say right, I've got $2 million in the vehicle myself. I have no debt at all. No debt. I have no AP. I don't know the lawyers, the auditor. There's not even any employees. So there's no agreements and contracts. There's not even a lease. So I've actually created a really, an anti-Vancouver trading portfolio. And my life mission is to break the matrix and to long-term create value for me and my family, because that's where I've placed my bets essentially. And it's hiding out in Bitcoin and gold. So we'll see how that goes. But I truly just hope to encourage people, because I'm the opposite of special. I'm dyslexic. I had mega addiction issues as a kid. I watched mom really struggle. I watched dad die super young from alcohol abuse. And then I watched all my best friends literally die in their teens and 20s and waste their life because of drugs. And So I'm very lucky to be here and very lucky to still tell the story. And it's, I'm 40 now, so all things considered, it's still got a few chapters to go. But yeah, my focus is health and mental health and raising good teenagers. And very long
You
answer. So again, I apologize to you.
no, that was a perfect answer. You have a resilient mind. I find
Thank you.
your background made you who you are. So in a sense, obviously there are some horrible things that happened there, but you wouldn't be who you are today if that didn't happen to you.
Without a doubt.
Is there, when you reflect on it, obviously I know, is there pieces where you go, that sucked, but also have you resolved that piece of yourself where you go, well, if that didn't happen, I'm not this guy, I'm not this dad. Like, you're a good
Yeah,
father.
not every day. So diamonds are forged in fire. So every day in my life, I literally go, thank you, God. So in 2020, something really devastating happened. I changed course. In 2028, something really extreme happened. I pivoted and I changed course. Around 35, I had another really bad accident. And I literally pictured God slapping me over the head, going, you idiot, you're doing this, and this. You know this is wrong. Now this happened. And if you don't alter course, it's going to be worse next time. So I feel like I've been given a hand, like a buoy out in the middle of the ocean so many times. I hate to even admit that.
Yeah.
But what's ironic about those tragedies, health or accident or however they may be, socioeconomic, anything, had that not happened exactly how it happened, this wouldn't happen and this wouldn't happen, and then I wouldn't be here today. So people often see tragedy as tragedy when, of course, it's all tragedy, but a woman has to bleed and scream to give birth. Before you can hold the baby, you got to suffer. And I'm a firm believer that when tragedy occurs, it can have unbelievable positive impact. And I'm living proof from like I've got two badly broken wrists from a bike accident. I've got a tibial nail down my leg from a different accident. My whole shin is a rod, a tibial nail. I've got countless stories, sadly, that should have and could have taken my life. And when they happened, I literally took pause and went, okay, universe, thank you that I didn't just die. I'm going to now change the way I'm living. And those tragedies saved my life, 100%. So, yeah.
I want to talk a bit about that because you mentioned buoys have come out of nowhere and helped you. I've always struggled with, and I'll use a health issue I had. A buoy came. I had a disease that had killed other people,
Mhm.
a high mortality rate. I should have died. I had to put together a will, yet I didn't. And and we don't really know why. Just luck. It's just like whatever. My body didn't collapse. I got a treatment just in time, right? But
Um,
a buoy was given, and I always struggled with like a sense of why me? I don't deserve it. I couldn't inherently. I
mhm.
did not. I can't help anybody. I have no power. I have nothing. There's nothing inherent. I can't do anything. And even financially, when I was building myself back up, I just got opportunities,
Yeah.
right? Where I go, oh my gosh, this is an amazing opportunity. And it came out and I go like, but I always felt this sense of like other people were more deserving of it. I'd take it and go, but
Yeah.
I felt this thing and this need because I felt so inadequate or maybe undeserving of even not dying when I should have died, getting money or getting opportunity when maybe it was even too early for a guy like me to get those opportunities. It was a great opportunity that it forced me, at least I felt this pressure to be better than I felt I was, act better, be nicer, be more responsible, to almost be deserving of what was given to me because I felt inadequate. I felt like I wasn't deserving in that moment. Have you ever felt that? I know that was still 100% to this day. I have children. I have a wife. I feel like these kids are better than I deserve. My wife is better than I deserve. My life is better.
Mhm.
Cause I live with myself and,
Yeah.
hypercritical. I go, shit, I have to be, and it's maybe sometimes I come across nice to people is because I'm actively trying to be my best self. I'm not trying to, cause I go like, man, if I in this position, I need to earn it. Like I always feel like I just need to make the universe feel like they didn't mess up by
Yeah.
not taking me out. So I have to keep being grateful and earn it and conduct myself in a way that's at least I don't know. You know what I'm saying here? Have you ever felt
I
that? It's just
think,
something if
I
I
think
feel all
the,
the time.
I think the only reason you have a loving wife and amazing, healthy, happy kids is because you are equipped with that grace, that humility, and that
Mm.
gratitude. That's my honest truth. That's God's truth. Because would you have it if you were incapable of recognizing those things? Like gratitude to me, if I was to say anyone on earth work on one thing, it's gratitude. That's it. Full stop. You get up in the morning, you put on clean socks, you just slept on a mattress, you just made a cup of coffee, you just got in a car and drove wherever you wanted. Gratitude is the root of all of it. So I would argue that Gary's life is phenomenal, and that he had to go through that crisis in the 20s, and that he has these incredible three people that love and depend. Is it two kids? Yeah, two kids,
Two
right?
kids, yeah.
That look at you and adore you every day because you have the heart that is able to be a recipient and a grateful steward of that, right? Like I even give like a funny little example talking about wives. The day my dad died, I got a call. I'm 20, just turned 20 a week ago. I turned 20 years old. It was just 19. Week later, he dies. I got a call from my grandma. Your dad's dead. I then get in my car, not know what to do. I drive to his girlfriend's, at the time, ex-girlfriend, long time, my stepmom's house, to tell her, Liz. I leave there. I bump into this cute little girl, Nicole. Well, Nicole's my wife that I was with now for
Oh,
1 year. So yes, it's just a coincidence. Yes, it's whatever, things happen, all etc. But was Jim's passing to put her literally in my past so that my three kids could live today, to show me how to be a better person so that I break the chain of 20 men before me that were
yeah,
misogynistic, alcoholic assholes, right?
yeah.
Maybe that's it. So I think we have the beautiful life because we're capable of gratitude, and that the universe has blessed us because our eyes and our hearts are recipient of the grace that has been given. I believe that firmly. And I do believe you would not be here today in this great place if you didn't have what happened to you in the 20s. I think those tragic events are, I hate to say it, but they're gifts in a weird way. They're gifts.
I think we've given people a lot to think about, and we'll end it there.
Went deep.
We did, and this was I'm both introspective and highly motivated to go do some stuff now after speaking with you. I just want to go be productive, but then also
Well,
give my
sure, do
family
one
a
thing
big hug.
first. Take 10 minutes after and just
Yeah,
literally just
yeah,
go, holy mackerel, life is
yeah,
good. And I talked about
yeah.
the dog test. Like when you come home, are you kicking the dog? Another good one is my grandpa always said this. It
Oh,
was the sock test, which I brought up because he said when you wake up in the morning, you're like, oh, getting dressed and this, and then stumbling and tripping, or are you slowly putting on a clean, warm sock, being like, what a blessing. It's just a tiny little image to go, a nice clean mug, a nice cup of tea, a hot meal, a protein shake. Like these are fucking gifts, man. And we've lost the plot on earth. We
yeah,
are living like kings today. 200
yeah,
years ago, we can order any meal we want in 11 minutes. We can
yeah.
go buy any car we want. We could live in any castle if we want the mortgage. Like we are living like kings, and we have lost the plot as a species of people being unhappy. So gratitude, gratitude, gratitude. Watch your portfolio go up.
There you go, guys. Gratitude. Thank you, Brayden. We will talk soon. I'd love
Thank
to have
you.
you back on later on in the year. This was fantastic. Everyone, check out the links below if you want to check out the book and any other links that Brayden has. Love talking with you. We will talk soon, brother. Take care.
Thank you, Gary. Thanks for having me. Take care.
Bye.